All right, so as we begin today, we also have y'all in the room today, but we've also got some people online, and so that's what this little gadget is up at the front, and they're online. I think we have 9 today. We had in December we had about this many in person, and about this many more online. So we're always thankful for people who join us online, and I just want to put this up there on the screen, especially for them, and that is that some resources for you. alsbom.org/CCS. That stands for Church Compensation Services. And those of you who are in the room, you have your book, and the very last printed page has resources, and these resources are mentioned there. So second thing, and so at that website, click on administrator resources, and then you'll find the financial issues book. There's an online version of this. You'll find the minister estimate of tax for 2026, and the minister estimate of tax for those living in a parsonage, and some resources like that. You'll find those things at that website. And so those of you who are online, you can do that, and you'll be able to follow along with some of the things that we're doing in the book today. So I'm thankful for having all those online. And so we're going to talk, first of all, about the 2026 tax changes. And you should have a little single page in your packet that should say 2025-26 tax changes. Does everybody have that? Oh, wait a minute. I made a mistake. I did a quiz this time. Let's do the quiz first. And do y'all have that in your packet? Let me back up to that. We're going to do the quiz today together. Okay. All right, let me give y'all a couple of minutes to look over that quiz, and they're all true false. I made it pretty easy this time, and let's see how you do. And then we're going to do it together, and that way you'll know the answers to it. But on this quiz, the reason that I do the quiz is that these are things that are important. These are things that I want you to take away today, that you know. And so I hope this quiz helps emphasize those things. We will be talking about those things today, but it's a good little test to check you and see how you're doing. Also, I'll mention for those of you who are online, you can type in a question, and Lori will help us to know what those questions are and feed them to me, and we'll answer them live today. right, I'm going to give you about another minute. And if you haven't finished, it's okay. All right, let's get started. These are all true or false. So number one, on a minister's W-2, boxes 2, 3, 4, 5, and 6 are always blank. Always blank. Is that true or false? Could be true, but it's false. It's false. It's box 3, 4, 5, and 6 are always blank. 3, 4, 5, and 6 are always blank on an ordained minister. Now 2 is for federal tax withholding, and they can have federal tax withheld if they ask you to. And for a minister, that's one of the odd things about a minister. The withholding is optional. So they can do their own quarterly tax estimates and send it in themselves, or they can have you withhold. And so it's possible for box 2 to be blank too, but it could have an amount in it. So the real answer, the true answer is 3, 4, 5, and 6 are always blank. Number 2, your church may contribute to the church retirement plan through Guidestone, and Guidestone and the State Board of Missions provides some extra benefits. That is true. We just talked about those a minute ago. All right, number 3, a Holy Land trip given to the minister is not taxable and not included on the W-2. That's false. That's false. It is taxable, and it does go on the W-2. Number 4, sending a minister to the convention and his spouse as a voting messengers is not taxable. That's true. That's true. Those are reimbursements of business expenses. And I'll say about number 3, the only way that could be not taxable would be that you're doing a Holy Land, a mission trip in the Holy Land. It's not one of those that you do sightseeing and learn about Scripture and how it relates to this locale. It would have to be a mission trip to the Holy Land, and you're not going to find that easy to do. All right, number 5. If the pastor takes a prospective family to lunch, talk about the church, their prayer needs, it may be included in an accountable reimbursement. Yes, that is true. He could get reimbursed for that. Number 6, a church may provide the use of a church-owned vehicle to the minister for business purposes tax-free. That one is true. It's possible. Possible. But if he uses it for personal reasons, then you've got to account for the mileage, and he's got to reimburse the church, or you've got to add that to his W-2. Also, if he gets to drive it home every night, there's a method to account for that as well. It can be a good arrangement, but and if it's 100% used for church purposes, then it's not taxable at all. All right, number 7, if your church cannot provide a group health care plan for your staff, you may possibly provide a health reimbursement to help cover the cost of their individual plan. That is true. There's a way to do it, but you got to do it the right way. If you do it the wrong way, it's taxable. So you've got to do it the right way. We'll talk about that just briefly today. Number 8, the church may reimburse a cell phone for the staff tax-free. Yes, that is true, and you should be doing it. No matter what, if you're very, very small and you don't have a whole lot to offer the pastor or staff, you should be doing that. Okay, number 9, a love offering or bonus may be given to a volunteer as long as it's less than $600. It's not taxable. That one's false. That one is false. If you have a volunteer, well, I'd say in about 90% of the cases that's false. If you have a volunteer, they were paid for what they're doing, they would probably be a W-2 employee, not a 1099. Like, for example, let's say you got a volunteer pianist, and at the end of the year you say, well, we're going to give you $500 bonus. Well, you just made that person an employee, you got to do a W-2. If you give money, let's say you got volunteer musicians, and you give them a monetary bonus at the end of the year, you've just made them employees, and you've got to give them a W-2. The only thing that this one would be true would be if you've got something that they're doing that if they were doing it for pay, they would be an independent contractor, not an employee. And I can't think of very many volunteer positions in the church. You know, like if they paid you to teach Sunday school, and that's never happened, but let's say they did. Well, you got to be there on Sunday morning. You've got to use typically we've got a text that we're teaching from. Typically we're teaching the same thing each Sunday morning as other classes are doing, things like that. And so if you were paid to do that, then you would be a W-2 employee rather than a contract worker. See how that works? All right. Let's see. All right. Number 10. We may pay an intern a $600 or $500 stipend for the summer, and it is not taxable. That one is false. That's false. That summer intern, we're going to tell them what time to be there and what they're doing and how to do it and what to do and things like that. So they are an employee, and we've got to follow the rules about being an employee. Number 11, and by the way, there's a number of churches that do that with the summer intern, and they're usually often guilty of a number of things like Fair Labor Standards Act. They're violating that. They're not even paying minimum wage, or certainly that person might be doing some overtime hours and they're not doing that either. So be careful. Be careful. You've got to treat them as an employee when you have a summer intern, if you're going to pay them. Now, if they're totally volunteer, they don't get paid anything, you can have them work 80 hours. But if you're going to pay them anything, then be careful, because you might be making them into an employee. All right, number 11. If the church does not provide an accountable reimbursement of business expenses, the minister may simply write them off on his own tax return. That's false. That's false. Used to be true a number of years ago, but since 2018, that is false. He cannot write them off on his tax return, and he's just out of luck. He can't. He just incurred that expense and didn't get reimbursed and can't do anything with it. Number 12, a love offering for a minister or staff is taxable and included on the W-2. That is true. That is true. You got to do that. Number 13, a love offering for a benevolence case, a benevolence need is taxable, included on a 1099. That one's false. It's a gift. And as long as you verified that it is a need and you gave according to that need, then it is not taxable. It's a gift. Number 14, the threshold providing a 1099 is $2,000 beginning in 2025.
I wish.
Yeah, I wish. That was false. It will be true beginning in 2026. But now, let's all remember what year we're working on today. You know, we're working on 2025. So it's still the $600 threshold right now. And those things that we'll be doing in January of 26, then it will be subject to the $2,000 threshold. 15, overtime pay may be reported in box 14 of the W-2 for 2025. I've got an error on the test, but I think I changed it. But you got the old one. Mark out that included in boxes 3, 5, and 16. Mark out that. That one makes it false. I'll tell you what. For 25, the IRS wants you to put it in box 14, labeled overtime pay, X. But it's something that they're going to deduct on their tax return for the 2025 year. Maybe next year it might be done as it's described here. We'll find out later. They have not given guidance on exactly how that'll be done in the future. But for the 2025 W-2, you only list it in the overtime pay in box 14, and then it is included in box 3, 5, and 16, and then they're going to deduct it. Well, no, so I'm sorry. So you don't need to mark that out. Don't need to mark that out. Okay. Oh, I know my mistake there, and what I changed on it. It's included in box 1, 3, 5, and 16. That's the right answer. It's included in box 1, 3, 5, and 16. And then this number 15 might be true for 2026.
And this is federal overtime tax, because that's state overtime tax.
Yeah, the state let us have that tax-free for a year and a half, but that one expired. So for state purposes, overtime pay is taxable just like everything else. And as far as the W-2, it's taxable just like everything else, and they will be able to deduct it. They'll be able to deduct the extra half-time is what they're going to be able to deduct. So it will be included in boxes 1, 3, 5, and 16 this year. All right, number 16. President Trump says that the new law eliminates tax on Social Security benefits. Is that true or false? I'm going to say it's true. It's in a roundabout way. That they didn't eliminate the tax on Social Security benefits, but they gave everybody over 65 an extra $6,000 deduction. Not deduction, personal exemption. It's exempt. It's part of the standard deduction. It's a larger standard deduction for everybody over 65. And
is that for 2025? Is that for the year 2025, or
yes,
will that start 26?
It starts in 25. But now this is not for you to worry about. It's your employees who will worry about it. And if you take, let's say you got $50,000 in Social Security benefits for the year, which is a lot. That's about $4,000 a month, and 50,000 times 12%. I'm using the 12% tax bracket is about $6,000. So it's funny why they chose 6,000. That's about the maximum Social Security benefit. So he didn't actually remove tax from Social Security benefit, but did it in a roundabout way. But that's the explanation of that. Okay, and you can say that's true or false, whichever way you want to go on that one. All right, if a person gives an offering designated to the pastor, it is tax deductible. Probably false. Probably false. It can only be the way the church decided to do it. Let's say that right now, I go to my treasurer and I say, I want to give $100 to the pastor, well, and I want that on my giving record, the answer is no. It's not. It's not a tax deductible item. But if we participate in a love offering we choose a staff time that we honor them and give them a love offering and stuff like that, it is deductible at that time and according to the church's rules. So the church decides how that works. The church sets it up on, everybody gets a W-2 is going to get a part of this love offering, or it's just the ministerial staff, or however the church does it, that I've got to agree to go along with that. I can't say, hey, I want my money to go just to the pastor. That would not be deductible. I've got to go along with what the church does. Okay? So that one is false. I'm assuming that it's, designated only to the pastor. And that was their intent. Number 18, ministers have a dual tax status. They're employees for federal purposes, self-employed for Social Security purposes. That is true. That is true. And that's one of the key things that we all need to understand today before we go home, is that ministers have a dual tax status. They're employees for federal and self-employed for Social Security. All right, 19, our church can change a designated fund simply by a vote of the congregation. Is that true or false? It's false. It's false. It takes a two-step process. You've got to have a vote of the congregation, and you've got to get permission from the members. And so it takes both steps. Number 20, our church may borrow from a designated fund and simply by a vote of the congregation. Is that true or false? That one's false too. You're not even supposed to borrow from it. We will talk about, there is a way to deal with a designated fund that we no longer want to have. There's a way to deal with it. We'll talk about that later on today. How'd you do? How many of y'all?
I need to be here. I found that out.
How many of y'all got 80%? Okay. All right. Good. Good. How many of you got 85%? Okay. All right. Good. That's really good. All right. So as we go, we'll be talking about some of these things as we go today. All right. Let's go back to where we were. And you have in your packet another sheet. You got another sheet that says 2025, 2026 tax changes. And we're just going to go through this quickly because the bottom line, and I'm giving away the suspenseful ending of this page, the bottom line is there's not a whole lot of change for us as a church. That we do things that differently at this point. So, tax changes. The very first thing and the very most important thing about the tax changes is that they made permanent the 2017 Tax Cuts and Jobs Act. They made that permanent. So, remember back in 2017, it affected 2018 and on. They made some drastic changes to the way we do our taxes. And you remember the system before that? We had a standard deduction, we had personal exemptions, we had all kinds of other things going on, and our taxes were fairly complicated. And then with the changes that happened in 2017, it simplified the taxes. And one of the goals of Congress for several decades has been to get our taxes that you could do it on a postcard. And now that tells you how long ago that goal was, because nobody would ever want to have their information printed right there for all to see. But that tells you how old it was because there was a day that we didn't care. And when I went to college, my Social Security number was my student ID number. When, lots of things, your healthcare stuff was probably your Social Security number and all that stuff. And we were just giving it out like candy at that time. But anyway, they fit the tax, as long as you've got a simple statement that you can do, they fit it on a sheet that's front and back that size. And you can do this, and there are postcards that size. So they did accomplish that in making it a lot simpler. So now we've got a doubled standard deduction that is even larger than where it started. And the main thing is, what is your marital status, your filing status? So you do that. What's the standard deduction? Do you have children? And from that, you calculate what your taxes are. And that's pretty much it, unless you've got a complicated situation, and then it's about as complicated as it ever was. So that's the way it works, and they made that permanent. And so we would have gone back to the old W-4 form. We would have gone back to the way of doing it with personal exemptions, things like that. And so that's one of the big things, is they made that permanent. Standard deduction is up from $15,000 for single to $15,750, and from $30,000 to $31,500 married filing jointly in 2025, and it will be adjusted for inflation. It's a higher number for 26. So I was surprised. There was already a number set for 2025, and they increased that standard deduction a little bit. Here's the one that you all want to know, that's important for everybody to know in this room. Estate and gift tax exemption has gone from 13.99 million to 15 million. And so I know that'll be a relief for everybody. The child tax credit is up from $2,000 to $2,200, and they made $1,700 of that refundable. Now, what that means, refundable, there are tax credits that are partially refundable, and there are tax credits that are not. And what that means, if you get your taxes worked down all the way to zero and you have a refundable credit, you're still going to get some money back. And if that's a refundable credit. If it's a non-refundable credit, you get down your taxes down to zero and you've got a credit still, you're just tough, too bad. It's still zero. It's not less than zero. So that's a refundable credit up to $1,700, and that number will be adjusted for inflation. The state and local tax deduction limit is up from $10,000 to $40,000 in 2025. Next, there's a senior bonus deduction. $6,000 deduction will be available to individuals with up to $75,000 income, and up to $150,000 if married filing jointly. And if you're both over 65, you'll both get that $6,000 deduction. So that'll be good for those of us old folks. Now, there are Trump accounts for child savings, and for children born between 25 and 28, there will be $1,000 deposited into an account for them. Now, there's a process to claim that. It doesn't happen that automatically, that they just set it up for you. But there's a process to claim it, and for those children born during those years, that money will be put into an account that will be some kind of a index fund, like it'll be like an S&P 500 fund, and you won't be able to access it. I don't think you can access it until they're 18. It can be used for college. It can be used let's say they don't go to college and I think they can use it for their first house, things of that nature. But it's intended to be long-term investing beginning of long-term investing. Parents can contribute to it, even your workplace can contribute to it, is possible. But those will grow through the years. Next, car loan interest deduction, that you can deduct up to $10,000 of annual interest on new auto loans. And notice that that is new, not used. Only for a new car. And the tax break is temporary from 25 through 28. And it's also got to be an American car. So it's got its final assembly point has got to be the U.S. And I think, I'm not sure on this one, but I think the North American Trade Agreement thing, that I think it applies to things built in Canada and that northern stretch of Mexico, I believe. I'm not certain. You'll need to check with your tax advisor before you do that and assume that it's going to be deductible. Because also there are, like for example, there's cars that I drive a Honda. It was built in Ohio. A lot of us, drive a Hyundai or a Kia. They were built here in Montgomery. There's at least one BMW built in South Carolina. But most BMWs that you would buy would not be, so they wouldn't qualify. So you really need to do some checking before you actually pull the trigger on that. But it's a new car and an American-made car. Tax break on tip income, temporary federal income tax deduction of up to $25,000, and that will be deducted. It's your W-2 is still going to look just the same. It would be deducted. Overtime pay deduction up to $12,500. Again, your W-2 is going to look the same. It would just be deducted on your tax forms. And let me say this. I've already been asked this question. When we do a bonus for our staff, can we consider that tip income? And the answer is no. No. It's going to be those industries that tips are standard. Just tips are expected and that sort of thing. So I thought that was a clever question, but unfortunately the answer is no. Charitable deduction for EV credits have already expired for cars, and then for things like solar panels and some things like that, they've already expired December of 25. Charitable deduction for non-itemizers, beginning in 26, non-itemizers will be able to deduct $1,000 charitable deduction even if they cannot itemize. Even if they can't itemize. And that would be $2,000 for a married couple filing jointly. So that's going to be a good news. Might encourage some to give, and it will be available. But notice that it starts in 26. So the taxes that are working on right now, it won't be in effect yet. 1099, the threshold for 1099s in 26 will be $2,000. So what you're working on right now, if you're working on 1099s, that threshold is still $600 or more. And so bottom line for the church is that things are pretty much the same as they have been since 2018. There's not very many changes that are going to affect you as a church. One thing is if you have overtime pay, then you would want to put that in box 14. That's an information box, and it would be good information for them to have. And by the way, while I'm talking about that, if you have a worker, and I'm not talking about a minister, Not talking about a minister either ordained or not ordained. Now, they're exempt. But if you have a worker other than a minister that works overtime, you are required by law to pay it. So, so don't fudge on that. Don't say, hey, 2 weeks from now we'll let you take a day off. You can't do that. You can't do that. The only thing that you can do is if your work week, you can define your work week. So maybe your work week ends on Wednesday, and let's say the overtime occurred on Friday before. Then on Monday you can say, yes, you can say, hey, take 2 hours off to make up the difference. But if the work week has already ended, like say your work week ends on Friday and the overtime happened on Friday, you're just out of luck. You got to pay it, and you're required by law to pay it. All right. So those are some of the basics that are happening in 25 and 26. And bottom line for the church is it's not a whole lot different than it has been these years. Okay. Let's get on to the next thing. Let's go to year-end procedures. And this is about somewhere between page 100 to 103, somewhere in there. Some of you have a 26 book and some of you have a 25 book. It's just impossible to make these changes and get it done that quickly. So if you've got a 25 book, you're going to have a sheet inserted in it that's going to give you the tax changes. If you've got a 26 book, it'll already be there. But let's look at year-end procedures. This is somewhere on page 100 to 103. Did y'all find it? Everybody find it? Okay. So this is done by an article by Richard Hammer every year. Every year it's updated, but it has a lot of the same kinds of thing each year, that these are the most important thing for you to do as you begin the new year. And I just think it's an outstanding article. Because of it, we'll cover some of the things. There's a few things that we'll kind of cover again because of this article. But I just think that it's an outstanding article that's very, very important. So, first of all, now is the time, if you haven't already done so, and you really should have already done so, is to have your housing allowance set for 2026. And it's requested by the minister. It's then approved by the church. Now, that approval is a vote of the church where it appears in the budget. It could be approved by the finance committee or some body like that. But it needs church approval, and then that becomes the housing allowance. It cannot be done retroactively. So, if you get to March or April of this year and you say, oh my goodness, we didn't do a housing allowance, well, you're out of luck for those first few months. And let's say, I'm just going to use these numbers for simplicity's sake. Let's say you've got a bivocational pastor that makes $24,000 a year, $2,000 a month, and in March or April comes to you and says, hey, I really want all my income to be housing allowance. I can justify that. It would fit my situation. And you can say, yes, we will prove that, but it will only affect from this point forward. So he's already had 3 months of pay. He's already had $6,000 paid for him, and you can't make that housing allowance. You can only make housing allowance from what he's paid from this point forward. Okay? So now is the time. Now is the time to make sure that they've done their housing allowance request. And like I said, the minister requested, church approves it. You can have, if you want to, you can have some safety wordings to it. You can say this housing allowance is in effect for 2026 and all future years until changed. And that way, if we ever forget to do it, we've at least got the last year's number. Now is the time to do W-4 forms and A-4 forms. And you're really supposed to do this every year. You're supposed to. I know a lot of churches don't, but you really ought to. Things can change. Family status can change. All kinds of things can happen. Well, like children, I remember when my oldest daughter became 17, and I'm like, oh my goodness, we just lost a tax credit, you know. So that kind of thing can happen with families as they are growing, and you know, you could have somebody have a new baby during the year, and now they've got that deduction. So things could happen, and it's good to do the W-4 form every year, and A-4. Now, the W-4 form is very simple. It's just their name and stuff, then their filing status, like married filing jointly, then it's how many children do they have. Well, before children, there's a box that you can check. If they have two incomes in the home, two or more incomes in the home, they ought to check that box. And what that does is it decreases the amount of standard deduction you're accounting for, so that they don't have too little withheld. And that's what that does. If they don't check that, if they're both working and they don't check that box, they can get in trouble with being under withheld and could possibly have a tax penalty for being under withheld at the end of the year. Then about the children in the home who are under 17, and then step 4, you can have additional withholding if you want to, and then step 5, sign it. Now, in your packet, there is a copy of the 26 Minister Estimate of Tax. Minister Estimate of Tax. And anytime you want to, you can find it online at ausbaum.org/CCS. And let me say about this, my goal was to fit this form on one piece of paper. And so it's got mistakes. And I'm about to tell you what those mistakes are, so that you'll know. If the IRS did this form, it would take at least 10 pages. So I wanted to fit on one page, and here's what I did. You start with, and let's pull it out and look at it if you want to. You start with your taxable income, not housing allowance. Your taxable income, not housing allowance. Then you're going to add in another family member's income, like spouse's income, if you're married filing jointly. And you're going to come up with total taxable income. Then you're going to take that number. Remember, you omitted housing allowance. Take that number and you subtract the standard deduction. And that standard deduction is 32,000 for 26, but we're still talking about 25, so it's 31,500 for a married couple. And so you subtract that. Then you take that taxable income minus the standard deduction, and we're going to multiply that by 12%. Now, here's a mistake. There's a 10% bracket first, then there's a 12% bracket, there's a 22% bracket, and I just used the 12. What that's going to do is it's going to result in an estimate that's slightly high because I skipped 10. And for a minister, this will work for an income up to about 140, maybe a little bit more, 1,000 family income is what I'm talking about. Depending on the housing allowance that they ask for and that sort of thing, it will work for up to that. Now, beyond that point, they're gonna need to account for the 22% deduction, 22% tax rate. And, they could even more, but most of us are gonna fit in this tax rate. Most of us are gonna fit in there. We do have some ministers that they're not gonna fit in that, but most of us will. So, multiply by the tax rate, then you subtract from that the child tax credit if you have children under 17, and then you come up with the taxable income for the family. The tax for the tax for the family. What is the tax? Then you're going to calculate the SE tax, self-employment tax, but that's only on the minister, only on the ordained minister, not on anything else. And you take their income, and now this one is exact. You multiply it by 0.9235, then you multiply it by 15.3%. And that will give you and that includes both housing and salary. It includes both, not just the housing allowance. It's on salary and housing. And so you calculate the SE tax, add it together, you get the total tax for the family. Total tax, this is what you're going to owe for 2026. Then you subtract the withholding, the federal withholding on the spouse's check. You subtract that federal withholding, and then you come out with what the minister should be withholding as federal income tax. Now, if you go to the charts and stuff, there's a lot of ministers that, especially more than half of our ministers are bivocational. Many of them can have all of their income be housing allowance. And so if you look at the charts for how much federal do I need to take out, it'd be zero. And even if they made like 50, 60,000, it might be just, and their housing allowance, the federal tax withholding would be very, very small. But they need to withhold all that amount to keep from incurring a underpayment of tax penalty. It'll all come out in the wash, is what I'm saying. All right? Does that make sense? So, 2 mistakes. I skipped the 10% bracket. Second mistake, I didn't include higher brackets than the 12. And so some ministers might need to adjust for that. But it'll get most ministers within that time, that wage frame will fit in that. And it'll get you close. It'll get you close to an estimate. For a lot of ministers, it will estimate just slightly high. The most it can be off is about $400 high. All right, any questions? Should be doing it, and this is a great help to your ministers. They should be estimating it, because a lot of ministers under withhold and or underpay their quarterly payments, and then they get to April 15th and they got a big bill that they've got to pay. All right, December is a good time to do year-end forms, and so how much do they want to come out of their check for retirement? And if you have anything like a flexible spending account or other kind of thing, how much do they want coming out of the check for that, and so forth. Those things need to be done at this time of the year. And these things, let me just mention, the withholding, W-4, A-4, year-end forms, things like that. The State Board of Admissions has a very simple way to do this. Today, well, is it today or tomorrow? Today or tomorrow? I think today, we all got paid. And we got paid. And for those who didn't turn in their forms, what happened to them?
They don't get paid.
They don't get paid. It's real simple. It's amazing. It's just amazing how cooperative people are about filling out these forms. So, I'm sorry?
You must not have any youth passes.
Yeah.
Well, we've got some that kind of in that category. Yeah. But I hear you. My best friend in ministry, long time, was a youth minister. So anyway, I won't say any more about that. Is that okay, man? About saying enough? Okay. So year-end forms, you need to do those right now, and have a time that they get that done, and get it all done so that you don't have to track them down. Okay. Next, salary reduction agreements for retirement, flexible spending accounts. This is the time to do that. In fact, flexible spending accounts, you should have already done it. If you have those at your church, that should have already been done, because you've only got a 12-month window or a 15-month window, depending on how your plan is written. All right, staff Christmas bonus. You've got to deal with those bonuses and make sure that they're on the W-2. If it comes from the church, if it's money and it comes from the church, it's got to be included on the W-2. I don't get that question quite as much as I used to, but for probably 2 decades, that was the number one question that I got. Is there any way that we can make this bonus tax-free? The answer, no. It's got to be included on the W-2. So make sure you've dealt with that and applied it.
I do have one question about that.
Yes.
What if, unbeknownst to us, we have members who are just handing the pastor a card with money in it?
That's great. That's great. And that is a gift. And he can consider it not taxable unless he's done something for that family, like a wedding or something like that. But that is a gift, and you can do that. Okay. Is there anything the church can do tax-free to an employee? And yes, there is, but it's not money. There is, and it's listed in IRS Publication 15B, and it's called de minimis. That means that it's so small, don't worry about trying to account for it as being taxable. And so here's a list of some of those things from that list in Publication 15B under de minimis. And so things like donuts in the office, coffee or Cokes in the office occasionally, occasional use of the church copy machine for a personal purpose, things of that nature. You can give a turkey or ham at Christmas time, that sort of thing. You can give event tickets like theater or sporting event tickets. And these things need to be reasonable. Need to be reasonable. I'd love to go, probably not this year because I don't think I care, but I'd love to go someday to the Super Bowl. Well, I don't think that's what they're talking about as far as theater tickets or event. Theater, I don't think they're talking about Broadway. I think they're talking about your local community theater or a movie theater, and I think they're talking about a local kind of sporting event. You can get in minor league baseball for, is it still about $8? It's pretty cheap. Now, you can pay more and get a better seat, but I think they're thinking of those kinds of things. Cell phone use is listed here because we don't have to account for it. Our reimbursements typically are accountable reimbursements. This is a reimbursement that's not. All we need to do is present to the church our cell phone bill and they reimburse it. They can set an amount that's the maximum if they want to. They can say we will reimburse all of your portion of the bill, whatever the church would like to do, but the cell phone can be reimbursed. Now, so it's kind of hinted at on the test, but monetary gifts to volunteers should be avoided. If you have a volunteer pianist and you want to give that person money, then you've just made them an employee and you got to give them a W-2. So be very, very careful about that. And we do this with musicians, we do this with a lot of different people who've done things. Keep them a volunteer, or if you want to give them something and keep them a volunteer, then give them something that's not monetary. Give them something tangible. Give them something that's hinted at on that de minimis list. Give them something tangible. Give the pianist 2 dozen roses or something of that nature if you want to keep them a volunteer. Let's see, W-2, you do have to, this is relatively new, it's not that new, but if you have 10 or more 1099s and W-2s, you are required to file those electronically. And so make sure that you are. Okay, and then number 4, notice to donors. Put in your bulletin or newsletter or whatever communication you have with your members, please wait to file your taxes until you get your tax statement, your contribution statement from the church. Please wait to file your taxes. And that's very, very, very important because there's a way that they can get messed up. Let's say that you don't get statements out until about the middle of February, and they've already filed their taxes, and they get audited for their contribution, and they get audited for that contribution, and the IRS agent says, hey, I noticed that you filed really early. Did you have your statement by then? And they say, no, I didn't have it yet. And they can say, the IRS agent can say, then I'm denying all of these contributions. And you say, well, I've got canceled checks, I can show you, I can prove it. And they just say, well, it's too late. It's too late. So that's one of the things that you include in a little announcement or something. But also you can put out a sheet that educates your donors about some of the things they can do. And there's wonderful ways that you can give, like giving stock. Can you imagine why giving stock would be a good idea? Anybody know? Your church should be set up that you could receive stock. Because if they sold it and gave the church the money, what happens to them? They do get the tax deduction for the donation, but they also have to pay capital gains tax on the growth. If they give that stock direct to the church without selling it, then they get the donation, statement, but it is not taxable for that growth because they gave it to the church. So there are some wonderful ways to give, and you could do a little education piece. And Richard Hammer has one that he does every year. It's very inexpensive. I haven't looked at the price here lately, but I'd guess it's about $20 for you to be able to put out a piece that tells them about some good ways they can give. They can give from their estate. They can give in a lot of different ways. And you can find that at churchlawandtax.com. churchlawandtax.com.
Wayne, can I ask a question?
Sure.
What if they give online, and they pull their online statement and they use that instead of from the church? Is that legally okay, or?
Make sure
can they
that
use
make sure their statements have at the bottom, no goods or services were given in exchange for your contribution.
So I don't know what they would be pulling offline on their end. Ours do say that, but I don't know what they get off.
Do not, if you're talking about, one of the programs they
Yeah, like
offer?
e-giving.
Oh, they send it. if it's like Giveify or something, they send
email.
that person that statement, and now what it has on it, I have no idea.
Our statements are done online, and they don't print statements at all. So it's okay as long as it has the proper information on it. Yeah. You might check somebody's, ask somebody that does it, would you check your statement and make sure that it should have the name of the organization, the date, and the amount of each transaction, each gift, and somewhere on there it's got to say, no goods or services were given in exchange for your contribution. And some of the statements will say that unless otherwise noted. So that statement's got to be on there, or the IRS will deny the contributions. Okay, good. That's a great question. All right. Year-end contributions, they must be received by the church by the 31st. By the 31st. 31st was Wednesday this time. And so if y'all have Wednesday night, prayer service and meetings and things like that, and they brought it to you Wednesday night, that was okay. Otherwise, it's got to be postmarked December, and you just got it on 2nd or 3rd or 4th of January. And it's got to have that postmark. Otherwise, and I felt so sorry for the donor, but it's what the treasurer told him. It was correct. There was a guy that made a $50,000 contribution to his church and didn't bring it to the church until Sunday, this past Sunday, which was January. She had to tell him, I'm sorry, it's going to be a 2026 contribution. It's not 25. And so that's very, very important. And this is part of educating your donors. They've got to understand that it's got to be in the church's hand. Let me say something about postmarked. Jim Sweenberg sent out a notice. It was a news article that the post office is no longer going to worry about getting it postmarked that day that it comes into them. They're not going to worry about that, so it might not happen for a couple of days. How many of y'all are having some issues and with mail, with delays, with? Okay, is that about everybody? Okay. Well, so now it's not just the mail; it's also the postmark might be delayed. So they shouldn't count on that. They really should not count on it. Any kind of electronic giving happens the day that it took place. So you might have something electronic that they hit the button on December 31st, and on your bank statement it'll show a transaction date and a posting date. And that's okay. It's the transaction date. It's when they actually hit the button and gave it. All right. Be sure and include on your statements no goods or services were given. All right, number 6, business expenses. If you don't have business expenses reimbursed accountably, this is the time to get that done. That's important because, like we said on the test, if they don't have an accountable reimbursement system and they're going to try to deduct it on their taxes, they're out of luck. They cannot do it anymore. There used to be a line on Schedule A that said employee unreimbursed business expenses. That's no longer there. And remember your pastor, remember that dual tax status? For federal purposes, they are an employee. They're not an independent contractor. So make sure that you are doing an accountable business reimbursement. Number 7, make sure that you've got your workers clarified properly for IRS purposes and for Department of Labor purposes. So for IRS, you've got to make sure that they are exempt or, no, that's Department of Labor. For IRS, are they an employee or not? And your ministers are employees. You could have some independent contractors, and those you would give a 1099 to, but make sure that you're doing that correctly. A lot of times churches do that incorrectly just because it's easier for the church. You know, hey, we won't have to withhold taxes. We won't have to match FICA if we just give them a 1099. And that's improper and could potentially cause the church some problems. So make sure that you've got people classified correctly as employees or contract workers. And then for Department of Labor, who is exempt? And your exempt workers are ministers. They're exempt whether they're ordained or not. They are exempt. In the church, most others are not exempt. You could have one of the most common examples of somebody who is exempt might be a daycare director, and they supervise other people, the teachers, and they could be exempt, but they've also got to make just under $36,000 a year. And they've got to do both of those things to be exempt. Now, your ministers, they are exempt even if they're part-time and they make $20,000 a year. They're still exempt. They still can take the kids to camp, work 80, 90, 100 hours that week, and you don't have to pay them any extra. So ministers are exempt. Most everybody else in the church is not.
What about an assistant to a minister? That would be
A minister, an assistant to
like one of the ministers.
to one of the that person would not be exempt. Yeah. They've got to either supervise other people, or they've got to have a technical degree in order to, like computer science and those kind of things. Those types of reasons, they can be exempt because how much they're paid. If they're paid, I don't remember the number now. It used to be over $100,000. They can be exempt, but that usually doesn't fit. Yeah. Okay. So are they exempt or not exempt? Business expenses, classification of workers, and we'll look at this again in a minute. But this is also in your black book. We'll look at it when we come to it. Make sure the ministers are properly classified for Social Security. You cannot withhold FICA on an ordained minister. You cannot. Now, if you've got a children's minister that's not ordained, yes, you would withhold and match FICA. But for an ordained minister, you would not withhold and match FICA. Some of them are gonna ask you to. Can't you just treat me like an ordinary employee and I'll even give up the housing allowance, but you treat me like an ordinary employee? You can't do it. And this is found in IRS section. No, I didn't put it here. I didn't, but in the book, in the new book, I've got it where I talk about on the page that I talk about Social Security taxes, and I've got the IRS code listed that says that an ordained minister must be treated as self-employed for their Social Security.
How long's that been around?
Forever.
Forever.
Yeah. As long as I've known anything. Well, now I take that back. I think it happened, of course, Social Security came about in the 30s. I think it was in the early 50s, ministers were excluded from the Social Security system. They couldn't get involved. But as far as I know, and I mean, I've known about ministers in Social Security since the early 70s.
This was in 2000s.
Yeah,
We was on. We did.
yeah.
We paid.
But yeah, you got to do it. Okay, so a minister can have voluntary withholding. they can use that form and they can estimate how much they want you to withhold, and that would be helpful to get them to withhold so that they're not facing underpayment of tax penalties. Okay, review payments to independent contractors. You're going to get ready to do a 1099 on them, and then other IRS forms. Now's a good time to order that for, if you want to order some. Okay, let's take a 10-minute break, and then we're going to come back, and we've only got a couple more slides about this one, but let's take a 10-minute break, and then we will come back and finish this section. Rest of the article talks about before you close out the 2025, getting ready to start 2026, then do some double checking, print out everything, do backups of your computer stuff, and print things, get ready to do your W-2s. And one thing that Joe Ellen always taught us is, we've got a 941 due, but don't hurry on that. In fact, what she said is, on plain paper, print out your W-2s, say by the 10th, 15th of this month, print out your W-2s, look over them, check them, make sure that they make sense before you do that last 941. Then do your last 941. We used to, every year, and I haven't heard this problem in a couple of years, but every year we'd have somebody on January 3rd or 4th call, I've just done a 941 and now I've sent it in, but now I found a mistake. Uh-oh. Well, you got to do a 941X, and that's no fun. And so if you print out your W-2s before you send in that last 941, you can check things for any kind of mistakes before you send out that one, and correct any mistakes that you might need to do. So check those, prepare for 26, and prepare your computer chart accounts and all those kind of things for 26. And then here's a very, very important update. If you have term life insurance, say through Guidestone, and it's based on like 2 times their income, 4 times their income, something like that. If it's based on a multiple of income, make sure that you update Guidestone with the new amount. Or otherwise they're going to be operating on last year's number. If you have disability insurance through anybody, for your staff, make sure you've updated the salary number to correspond with that disability insurance that you're providing. Make sure that you're updating. Had a friend of mine, and he's passed away now, but his church did give him disability insurance, which was wonderful, and I applaud them for doing it. Not a whole lot of churches do, and they should, but they gave him disability insurance, and later he did become disabled, but they had not updated that number in about 10 years. And so he got disability based on what his salary was like 10 years ago. So make sure that you update those. Okay, then take note of your deadlines. Of course, January 31st is the main deadline that we're working towards right now. There are dates for your 941s, and those will be due. And then if you want to discard some things, the back of the book, next to the last page in the back of the book, gives you some suggestions for retaining documents and how long. And so there's some things that would be, say, 3 years, some things 7 years, some things forever. And the chart in the back of the book will help you on that. Do we need to keep offering envelopes? You're not required to keep them at all. But a lot of churches keep them because they're a good backup. So if somebody has a question about their statement, you can go back to that and look it up and say, well, on July 15th, you gave this much. And you can check that from the envelopes and have that double check. So they are good, but you can keep them a year, you can keep them 2 years, you can keep them 3 years, whatever you decide that you'd like to do. At least keep them a year at minimum. Now, Hammer says you don't have to keep them at all, and you don't, but that's just some suggestions. All right, any question about year-end stuff?
Where it says contribution statement 7 years.
Yes, the statement itself, keep those 7 years.
People that you send out,
The ones that you send out, keep those 7 years.
if it's on my computer, do I need it paper?
If it's on your computer, just make sure that you've backed it up. And another question, and you might want to save them as PDF or something of that nature, that what if we changed computer software companies? Will our new program be able to read this? And or if we go from ACS to Shelby or whatever, will we be able to read it? So back them up to some kind of method that you'll be able to keep them at a minimum of 7 years. All right. Now, I want to talk a little bit about something that we don't normally talk about at this moment. Let's go to there's a section on internal controls. It's around page 66, 63, 60 something in there. In this book, in the old book, it's page 62. All right, everybody find it? It says 12 basic internal controls. Okay, yeah, it's going to be page 60. That's probably the new book, I think. So page 60 or page 62. Now, there's a number of suggestions here for you, but we're going to zero in on just part of it. So the reason I'm bringing this up is I've had some problem issues that we need to address, and Beth, if you don't mind, thank you. We've got some problem issues that we need to address, and so I want to talk to you about the most fundamental, most basic thing of all in terms of your procedures and how you do your procedures. And it's actually, part of it is down here under number three, but it's actually a two-part thing. You should have, when you think about your procedures, you should have a segregation of duties, separation of duties. That means that one person doesn't do it all. And I'm not going to ask people to raise your hand, but every time we do this conference, I've got a whole bunch of people that say, oh, I do all that. And that should not be. And so you should have, in your procedures, you have a couple of people are on an accounting team and they count the money. You got somebody else who does your bookkeeping, like financial secretary or treasurer. You've got another person or two, three that signs checks. You've got a finance committee that oversees the process. And all those are, you've got another person besides those who write checks to reconcile the bank statement. And so those should be done by different people. And in some very, very small churches, some of them have said to me, well, we don't have that many people. But you think about it, you could probably do it with about 6 or 7 different people. I know that'd be sort of minimal, but you could probably do it with about 6 or 7, maybe 3 on your finance committee, two counters. You really ought to have two rotating counting teams, and one person who writes the checks, a couple of people who sign the checks. So we want to have a segregation of duties. And then the second part of that is we want to have dual control. Dual control. That means that there's two sets of eyes on everything that we do. Two sets of eyes on everything that we do. Two or more sets of eyes. So, I've got financial secretaries who write the checks, sign the checks, reconcile the bank statement, sometimes count the money, all those things. And that should not be. And Joella Johnson, who is retired now, she used to always say, I want good internal controls. They protect me. They protect me. We've had a church, there was a church that I talked to recently that they've got budget money that's coming in that they do account for properly and things like that. They've got fundraising money that nobody knows really where it went. And there's no accountability for it. It doesn't come through the church. It's not counted and deposited by the church. And in fact, that particular situation, it was being given to the pastor, and that's illegal. You've got to count that money. If you're going to give it to the pastor, you've got to do it in such a way that it ends up on his W-2. So we must do these things properly. We must have good transparency as a church. And so there's just been all kinds of situations, a bunch of them recently, that I've just found that they've got very, very poor controls and don't really know exactly what happened to the money. So you got to know that. Any questions about that? I usually talk about that in the summertime when we do our other conference. But I wanted to mention it because it's been so recent that we've had so many of those kinds of situations. On your financial report, you should show the opening balance for that month, what came in, what was spit out, what it went to, and down at the bottom you should be showing what's left. And that was happening to one church that I talked to. They were showing what came in, but they didn't show what was left. And they were spending what was left. In fact, that was a case of embezzlement. And the statement was so confusing, nobody understood it. And it was so confusing that they didn't really look. They should have. They should have looked. They should have asked questions. But they went a long time. I think, if I remember that situation properly, that the person embezzled like $20,000 and nobody missed it, not at all. And this was a fairly small church. Okay, so those two things are our key things. Dual control, segregation of duties. Those are your most important concepts here. And if you're not doing it that way, you need to take some steps to work on, let's get this into a better system procedurally than we've been doing. Okay, any questions about that? Yes, sir.
A lot of what we do is, we have very few checks anymore. How do you do a dual recognition of online banking?
Great. How do you do different things about online banking? Now, Michael Batts is a pretty well-known CPA in church circles, and he speaks mainly to big churches. And so and in fact, some of this is kind of the way it's done at State Board of Missions, is that you have those separation of duties and dual control such that one person sets it all up, the other person pushes the button to make those electronic transactions happen. And that type of segregation of duties. What I have seen in smaller churches is, let's say that we do a whole bunch of electronic payments, and so the treasurer prints those out even on one piece of paper. Here's the payments I did today, and you print them out, and then you have your check signer, as they're signing other checks, they would sign that like it was a check, but just sign it, recognizing that yes, you did it. Yes, I'm acknowledging it. Yes, those things look normal.
Can I tell you my procedure of doing that?
Yeah.
Because I pay like the light bill and the telephone bill and the water bill, whatever, with online banking. I don't go from website to website.
Yeah.
But through that online banking, you get that bill. So you have that bill. I still use the requisition form. And the boss has to sign that because he sees that bill.
Yeah.
And then when he gives it back, I pay it in my financial system, in QuickBooks. It gives me where I put it in. I put it in as a bill, and I print that off, put that to the back of it. Then when I go online to do it, you have a confirmation.
Yeah.
And you can print that off. I put that on the back of it. So
Okay.
all of that is just showing, I put it in it was signed for, I put it in the system, I have the bill, and it was done online.
Yeah, that's wonderful, and that's a great system. And the thing that I was talking about, one more step in what I was talking about, if you're doing it, I'm thinking as easy as possible, not really a more proper way. But if you do that where you print it out and the check signer sign it, attach the bills. And then they look at, well, the power bill was, it is the power bill, it is this amount. It is the gas bill, it is this amount, so forth. That they're seeing those things. That was a way that some people took some money from some churches where they overpaid the power bill. Say it's $1,000, but I paid $1,500. And then when you do that for several months, well, eventually they're going to send you a refund. And then they took the refund and just cashed it. And so, you do want to sign what's been done, and you do want to show the bill so that it's accounted for.
Can you do that on auto draft? So
Can you do it?
Can you do that on like an auto draft so that it's not,
Yeah.
there's no
autograph
chance
is-
I don't do auto draft, so I don't know, but I think you would get an email from them.
you still get, right, you get.
Well, I
documentation.
would print that off.
Yeah, print that off.
And then when I go to pay it, surely you can print where you've paid it.
I
On
do.
the autograph, we do autograph for bank, for power,
Power and things.
central access.
Yeah.
It's just so easy. I mean,
Yeah.
here it is, there's no overpayment for refund or anything.
Yeah.
Super easy, you got a print, you got a bill, you got where last month was paid, you got when it's gonna come out of your bank, gone. There's not, autograph on that, so easy.
Yeah. Yeah, I'm not afraid to use auto draft. Yeah. All right, so somehow you get this done where you're showing those things that you've automatically paid and somebody is signing for it. Of course, the person who reconciles the bank statement, they're going to see those bills paid too. But the more eyes that are on it, the better. The better. All right. Anything else?
Yeah, we talked about this, and there are places where the majority of the fraud, the majority of the embezzlement happens. There's, that one that threw me off real big about getting a check.
Yeah.
I never would have thought about that. I've never been a good investment. I never would have thought about that. But are there places where it happens the most? And as a association, we can focus on, here's where it happens. Here's when it, then, they're creative, the thief is creative. But here's where this happens the most. And we
Well-
can focus on, you're looking at 1/3 of our church right here, and you're looking at our entire financial. I mean, this is it, that's full.
Yeah,
And so
yeah, that's okay.
I mean, we're looking at 1/3 of our church.
Okay,
Is
here's
there a place to focus on?
here's where it happens. Number one is there's either no there's no committee, there's no finance committee at all, and there are a bunch of churches that do that, or the finance committee they create the budget and then they're done for the year, and they don't ever meet again. That's probably number one. You basically got leadership that's asleep at the wheel. That's number one. Number two, there is a report that nobody understands, and like I said, there was one church that they showed the money coming in and showed the money going out, but you had no idea what the balance was, and some of that money going out was going out to the church secretary in the form of embezzlement. I'd say that's the number one and number two thing. Sometimes it's the way money is counted. We had at my church, and I wouldn't say this about any of them, they were wonderful people, but we had a counting team that served every Sunday for like 30 years. And, number one, they weren't in worship. And I just think, hey, you need to be in worship. But that just, if it's the same two people, there's temptation there. And in fact, Bobby Du Bois, who was the associate exec here and retired, he used to say there's a fraud triangle. And the fraud triangle is made up of, number one, there's a perceived need. Say the financial secretary, just saying that for example, or treasurer says, "Oh my goodness, I've got to pay for the kids, dental bill, and I've got to pay it. I don't have any money," and then a rationalization is number two. The rationalization is, "Hey, I'm going to borrow this money from the church, and I'll pay it back, and I'll pay it back before anybody notices." And they rationalize, and then sometimes that rationalization is, "Hey, they don't pay me enough, they should be paying me more," then I'll rationalize it that way. And so there's a lot of rationalization going on. And then third is just a lack of any kind of accountability. And that's the fraud triangle. And it happens in more churches than you would ever imagine. And I've not seen a person, but now that one, there's one that I thought set out to embezzle, but the rest of them have been that, that perceived great need, and I think I'll borrow it and I'll put it back, and then they don't ever get to put it back. They've got another bill that they can't pay the next week and the next week, and that type of thing. But this is very, very serious, and we need to have good accountability. So we all need a good finance committee. Finance committee could be 3 people or 4, and they need to be on top of things. And I think the treasurer or financial secretary should be a part of the finance committee as an ex officio member, and should be there to answer any questions. You can ask me anything and I'll explain it. You can ask me about any bill and I'll explain it, anything like that. So
there should be a finance committee other than those who are counting the money and writing the checks, depositing the money. There should be a finance committee overseeing them, is that what you're saying?
Well,
Or
yeah,
could they be all
ideally,
the same people?
ideally. Now, if the finance committee people are gonna do anything, I think it's okay for them to be on the accounting team. Maybe one of the finance committee members is assigned to reconcile the bank statement. You know, you've got a treasurer writing the checks and somebody else signing the checks, and then there's a member of the finance committee that's assigned to reconcile. So I think you might have one or two of them do double duty, but you know, we're talking what's ideal and then what is possible. And so do what is best in your church. All right, we're going to talk about procedures if you're going to pay somebody. And so, starting on page 7, some of the things we've talked about a little bit when we did the year-end procedures. Some of the things we've talked about, so those things we'll kind of go through pretty quickly, but then other things we'll spend a little bit more time on. So we're going to begin on page 7. And so the first thing that you've got to determine if you're going to pay somebody is this person an employee or is this person a contract worker? And you've got 3 tests on that page to determine that. The IRS is actually using the simplest test now. And so it's about the control. That's the bottom line. Excuse me. How much control do you have over this person? And that's what it boils down to. So you'll ask the question about, you know, do you tell them what time to come? Do you tell them what time they get off? Do you tell them when to be here, what to do, how to do it? Those kinds of things, then that's going to be an employee. If they can come at any time they want to, do anything they want to, in whatever order they want to, and especially they provide their own equipment, which they may or may not, then that's going to tend to be a contract worker. And so there's different tests here that are found here starting on page 7. Do you have any questions on that? Do you have somebody that you're not sure whether we should count this person as employee or contract worker? I'll tell you that there are some churches that make people contract workers who really shouldn't be. Sometimes the pianist, they pay the pianist and make that person a contract worker. You can't do that. That person is an employee. Maybe other musicians that you pay would be employees. If they say a person came in and did a one-time concert sort of thing for your church, well, that would be a contract worker. But if you have paid nursery workers, that would be an employee. Anybody have a question about anybody that you have and you're not sure kind of which way to go? Yes.
We have a pianist, but she doesn't take pay. And then we have a lady who will back up for her, and we pay her if she backs up. Usually I just do a 1099 on her because it's not, if it goes over the 600, I'll do a 1099 for her.
Okay.
Is that correct, or should she be?
I think you still need to look at the test and examine that. So who provides the equipment for this? The church does. What does the church tell them what time to be here? Yes. And what time you're going to get off? Yes. If it's extremely loose, like you know, she could say, he or she could say, hey, you know, I just don't feel like it today. I'm not coming. Maybe it's a contractor. If that person says, you know, I'd rather be at the beach today, I think I'll go there. Maybe it's a contractor, but I think it would tend, even though this is a substitute, I think in many ways it would tend to look like an employee. But I think it could go either way. Y'all might want to talk through these tests and kind of see how it works out. I think it could go either way. All right?
It's over the pulpit supply though. What if you have a pulpit supply and somebody reaches $600 in pulpit supply.
Okay, pulpit supply, if it's $600 or more, then it's gonna be a 1099. Uh-huh.
What's the difference between that and that?
Well,
Other than the gallon?
that, I would think, now, this is, you get into opinion and a judgment call and things like that, but I would think that a regular substitute might be an employee. The pulpit supply, they can certainly do it or not do it, or there's no real control over that. So I see a little bit of difference between the two. Now, let's talk about another one, interim. Interim, you can pay them as a 1099 worker if they only come in and preach, and that's all they do. But if they start doing other things like visiting hospitals or meeting with leadership or committees or deacons or somebody like that, then you really should make them an employee. So I recognize that it's some judgment here. That's just my thought on the subject. But if you're wondering, use these tests. You may want to involve a CPA and get their judgment on it too. All right. So first thing we got to determine: we're going to pay this person? We've already determined that. So is this person an employee or is this person a contract worker? And we use these tests to determine that. Now, over on page 8, the second thing that we've got to do is we've got to get these forms done. Now we're going down the road. We've got a Y in the road, and we're going down the road of being an employee. So for a while, we're going to talk about employee. At the very end, we're going to come back and talk about a contract worker. But right now, we're going to talk about employee. We've already determined that. So we've got to get them to fill out the 4 forms plus E-Verify. So the forms that you need are W-4, A-4, you need I-9. That's the immigration form that determines that they're legal to work in the U.S. Then E-Verify, and when you read the federal instructions on E-Verify, it says it's voluntary, but it is required by Alabama law. So if you've got a brand new employee, you need to do E-Verify. One of the ones here, y'all have a brand new pastor, and y'all should be doing all these, including I-9 and E-Verify. Y'all would want to do that, even on a pastor.
We called him, so we had to wait till they opened back up to get E-Verified, and the site come back up.
Oh, okay. Wow. Oh, and in your book, I put an Alabama link to E-Verify, which was supposed to be easier. The last I heard, that link is not working. So has anybody tried it here lately? Anyway, that's the last I understood, is that the link is not working. But you got to do both I-9 and E-Verify.
And if you don't go on the government E-Verify every 6 months, it'll lock you out.
Yeah,
Oh,
I just
I didn't know that.
notice. I just got a notice I was gonna have to go on or didn't know
All you gotta do is just log in and log out, but you gotta do it.
If you don't do it, do you have to sign up a new?
No, you just have to go through the process.
Oh, okay.
Redo it.
Okay. Then the final thing is NH1. That's the new hire form for Alabama. The last 2 are done online. The last 2, only do those on a brand new employee. Don't do them on your existing employees. But if you've not been doing this, you can do the first 3 on your existing employees. W-4 and A-4, and the immigration form, the I-9. Because the I-9, you don't send it in. You just keep it on file. And so you can do those if you've not done it. So you need to do these forms. Again, we're going down the road of an employee. And then, and common mistakes, it's very common to kind of think, well, the church doesn't have to do that, or we don't have to do that on a pastor, or a pastor's not really an employee, those kind of things, but you do have to do it. even on a pastor. And even churches have to do those forms that we're talking about. We've talked about the W-4 form, and we've talked about the form for ministers to help them calculate their taxes. And so we'll skip on by that. And then if the person is a minister, you need to kind of classify what kind of minister are they? Are they ordained? Are they not ordained? If the person is an ordained minister, they have that dual tax status, employee for federal purposes, self-employed for Social Security purposes. If they're ordained, you cannot do FICA on them. They do their own self-employment tax. If they're ordained, they do qualify for a housing allowance. Now, that's ordained or licensed, and if they're licensed, not ordained, they must be doing essentially everything the ordained minister can do in your church. But the non-ordained, they're not licensed, they're not ordained, you treat that person like a regular employee payroll-wise. You withhold taxes, you withhold and match FICA. You give them a W-2 that looks like anybody else's W-2. The minister's W-2 is going to look a little different. We're going to talk about that in a little bit. But so you need to, if they're a minister, we've got to determine what kind of minister they are. Then we've got to determine exempt or non-exempt. We talked a little bit about this morning. And so if they're exempt, then you don't have to pay them overtime. That's kind of one of the main things. So your youth minister, your pastor, they can take people on a retreat or camp or something like that, or mission trip or something like that, and they can work, 80, 100 hours that week, and you don't have to pay them anymore. I had a church that they termed their children's minister a children's director, and that was the terminology they used. And I said, well, it doesn't really matter about terminology. What's the job description? And so they told me a little bit about it, and I said, well, you could still classify that person as an exempt person, a minister. And they just did not want to refer to them as minister in any sort of way. And they're going to pay, we talked through all the different rules, and, they're going to pay overtime when that person takes them to camp. And they'd rather do that. I don't know why, but they'd rather do that. So that's, that was their choice. But your children's minister, your preschool minister, even if you call them children's director, you can classify them as a minister, and it's all about job description. So make sure that they have a job description that is ministerial. And to be ministerial, I had a tax attorney that taught us in a national convention type setting, and he said that the main thing is they impart the faith. So they teach children the Bible. They lead children towards Jesus. They lead children in a way that someday we hope that they'll make a decision for Christ. They teach the teachers how to teach the Bible. They minister to children. They minister to the family. They teach the parents how to lead that child in a godly manner. Those kinds of things are imparting the faith, and those things should be a part of your job description. And if those things are types of things, now you're going to have other things in there that they do activities with the children, or they make sure that, we order the literature or whatever we're using, those kind of more mundane sorts of things. But included in there, you've got those ministerial type terminology. And if you do that, then they are exempt. They are exempt. Any questions about that? Most of your other workers in the church, other than ministers, are non-exempt. There's a few exceptions, but most of them are non-exempt. That means, let me say one more thing. that means that you should be doing timesheets on those non-exempt workers. The Department of Labor requires that you do timesheets. And they've got a fact sheet about it. And in 2 pages, they tell you over and over and over again that you've got to get timesheets. And then one little 2-sentence section in that 2 pages says, if this person's hours never change, you may have an agreement with them that if their hours ever do change, they'll notify you so that you can make sure that you pay them appropriately. But the safer thing is to give them a timesheet. And here at the State Board of Missions, a bunch of us are ministers, and of course we're exempt. And then for the non-exempt workers, then they do a timesheet every week. And our timesheet is real simple, takes a minute to fill out, and it's just got spaces for each day, and you put in whether you worked 8 hours or vacation 8 hours or sick 8 hours or whatever, and it's real simple to do.
You do that no matter whether they salary or hourly?
Yes, we do that whether they're salary or hourly. For a non-exempt worker, we do need to be careful about the concept of salary. We need to be careful about that. For a non-exempt worker, really and truly, they're hourly, even if we put them on a, quote, salary. So if we put them on a, quote, salary, we do need to have that agreement with them. If your hours ever change, you must notify us so that we can pay you appropriately. So that if they ever have overtime hours, salary would indicate that, I can work 2 or 3 extra hours this week, and next week I can take 2 or 3 hours off to make up for it, that sort of thing. That's sort of indicated by salary, but for non-exempt workers, you can't do that. So you can do what looks like salary, but you need to have that agreement with them. So you make sure that if they ever work more than 40 hours in a week, that you've paid them. You're also supposed to pay them for all hours worked. All hours worked. So let's say that you pay your pianist $100 a week. And these days, I know a lot of them make a whole lot more than that. But let's say you did, paid them $100 a week. And so one week, the minister of music says, hey, we're going to have to practice every night this week. We're so far behind in getting ready for the Easter music, and we just got to do it. And pianists, you've got to be here. And in fact, I want you to meet with us some on Monday, and we're going to rehearse a few things, just us and a couple of other musicians, and I want you to be here for that. But if we still pay that person $100, that's not right. We got to pay them for all hours worked, and we should be doing those things. So be careful about the use of the word salary in regards to non-exempt workers. Okay? Now, for your non-ministers to be exempt, they must have a reason to be exempt, like supervising other people, but also they've got to make just under $36,000 a year. And if they don't make that much, then they cease to be exempt. They cease to be exempt. But your ministers, doesn't matter how much they make. You could have a part-time minister that makes $15,000 a year, and they're still exempt, even though they don't meet that salary threshold. All right, so classify them as exempt or non-exempt. Then we've got to determine what is taxable about their pay. And so obviously salary is taxable. Let's go on to page, I think 16, I think it is. Oh, actually, in the old book, page 21. New book is probably about page 20 or so. Okay. It says, the first part we're going to look at is medical expenses. Says up at the top, medical expenses, tax treatment. So if you have a group health care plan at your church, that is a tax-free benefit. It's not taxable. A group plan. If you have Guidestone, that is a group plan. Even if you've only got one, say your pastor's the only employee and he's on it. That is a group plan. It's called a church plan, so it's sort of a unique kind of plan. If you have only one full-time employee, and I'm talking about in regards to medical, 30 hours a week or more. If you have only one employee, you can provide the insurance for that one employee and consider it like a group. You know, the IRS knows you can't buy a group plan for just one person. So those three would be considered a group. Now, a lot of our churches have gotten to the point where they've said, hey, we can't afford this medical insurance, and so we're sorry, but we just can't. So what can we do? What can we do? And I want to tell you that there are a couple of things you could do, and I want to encourage them to do this if you can. If you can't provide a group would be the best plan, if we can. But if you can't do that, there is a way to do a health reimbursement. And one of them in the bottom right box on that page, it's got both of them alluded to. One of them is called a Qualified Small Employer HRA. Qualified Small Employer HRA. It's that QSE HRA. And that one is if they've all got their own individual insurance, you may reimburse up to, it's about $12,000 a year. That number goes up a little bit every year. So I have not checked for 2026 what it is. But say it's about $12,000, you could reimburse up to that amount for your employees. Now, there are some rules about it. It can't be from salary reduction. It's got to come from the employer. It has to treat all employees alike who work 30 hours a week or more. So, you can't just provide it for one and not the others who work 30 hours a week or more. And you can reimburse them for their individual insurance, and that's a tax-free reimbursement. Now, the other one is called an individual coverage HRA, and it's got more possibilities to it. The QSE HRA is only for the premium. It is only for employees who work 30 hours a week or more. You got to treat everybody alike and some rules like that. But the individual coverage HRA, that's that ICHRA, that one has a little bit more flexibility to it in that it could be for more reasons. If you want to do this, you may need to get an HR specialist to help you or a CPA to help you. You've got to have, in both cases, you've got to have a written plan. And that written plan is not going to be terribly expensive. It's not going to be terribly complicated. Once you have the written plan in place, you can administer it. It's not that hard. But I would encourage you in this day and age of a lot of churches saying we can't provide insurance, I would encourage you to do what you can. Do what you can for your minister. And let's talk about church size. How many of y'all are in a church that is less than 100 in attendance? Okay, that's most. How many of you are in a church that is running 200 in attendance or more? Okay? Anybody in a church running about 400 in attendance. Okay, we've still got a few. And so anyway, I'll stop there. But typically, and Lifeway and the Guidestone and the state boards of mission, the state conventions do a study of this. And from that study, Lifeway tabulates the results. And basically, in churches that are averaging about 250 or more in attendance, about 75% of those pastors have health insurance through the church. Obviously, churches running less than 100 don't. When you get to an attendance of 150, some do. I'm always a little surprised at that, but some do. So do what you can in the realm of health insurance for your ministers and other benefits, but health insurance is the one that costs so much. Some of the others are not all that expensive. So this page tells you a little bit about the tax treatment of that, and there's some things that you can do that could be tax-free if you do them correctly. And like I said, the top of the list is a group health care plan. But I know some of you can't do that. Okay, let's go to the next page. And so this is just a little chart to help you about some things that are taxable. And so salary is taxable. Love offerings and bonus are taxable. Notice this next one, gift cards are taxable. If the church provides a gift card, that is taxable money. I was talking about de minimis this morning, and in that same place, that same location, the IRS says that money, cash, is never too small to account for. So, they told you some things that were too small to bother with, like the Cokes and the donuts and the copy machine usage occasionally and the, movie tickets or something like that. And so those are, you just don't worry about it. But money is never too small as to account for it when you're talking about employees. And you've got to show it on the W-2. So then forgiveness of debt, that's taxable. We do have some, say, pastors typically, where they'll say, we're going to loan you some money for your house, and if you stay here, 5 years, over the 5-year period, we'll forgive 1/5 of it each year, and that is taxable income when you do that. The imputed interest rate would be taxable for a loan over $10,000. So you loan them money at 0% interest. Well, the IRS says, well, there's an interest rate you should have charged, and we're going to make you pay taxes on what should have been charged. So those are some things. Holy Land trip is taxable, like we said on the test. And then down at the bottom of that section, housing allowance is not taxable for federal, but it is taxable for SE tax, for self-employment tax. Okay, reimbursements. If you have an accountable reimbursement plan and you do it properly, that is not taxable income. It's not reported on the W-2, not at all. And you just get that minister or other staff member to fill out a form showing the date, place, purpose, and number of miles, or another reason, like they took a prospective member to lunch, and you can reimburse them for that lunch. Those kind of things, they turn in the receipt, and then turn in a report, and then you file that and reimburse them. If you do it any other way, that's not a accountable reimbursement, and so it's taxable. Like, let's say you said, we're going to give you a car allowance, and we're going to give you $600 a month, and it doesn't matter. You just use that for whatever you want to do car-wise. And do I need to turn in a report? No. We're just going to give it to you. Well, that's taxable income because it was not accounted for. Okay? Everybody On board with that? Okay, you may have reimbursements for business expenses. Commuting is not business expense. So their trip from home to church is not business expense. And if you paid for that, we've got a few that are bivocational that say they live 75 miles from the church, and the church says, we're going to pay you mileage for your trip to church. Well, that you can do that, but it's taxable. Okay, we talked about cell phone could be reimbursed. That could be tax-free. Now, about tuition, you may have a tuition assistance program at your church, but that's got to be a written document. It's got to be available to, say, all full-time employees or all employees, however you want to determine who work 30 hours a week or more, or whatever. You may do that. But if we had a youth minister one time that had not finished his college yet, and we wanted him to finish his college, and we really wanted him to go on to seminary. And so we helped him with his tuition for the bachelor's degree, and that's taxable. Because, I mean, we didn't offer a plan that was available to everybody. It's just that one person. And so that is taxable. For people who are, say, in seminary and it's a graduate level, that course may be reimbursed to that minister.
Let me ask you something. The spouse travel, it says that it is taxable, but say they go to the convention and she's, I guess, going to be able to vote.
Mm-hmm.
Is that taxable?
If-
Normally his is not?
If the person has a business reason to go, then it's not taxable.
Okay, what about mission trips? If,
Okay.
are we allowed to pay for her mission trip?
Mm-hmm. As long as that person goes and works and does everything involved in the mission trip. So if the person has if the spouse has a business reason to go and actually fulfills that, then it's not taxable. But if the person, let's say that the convention is in some place that everybody wants to go. Florida. Florida, yeah. And the spouse goes along and the spouse does not go to the convention and goes to the beach instead, well then expenses for her part would be taxable to that minister. Yeah. Yes, sir.
I worked for the government for years, and we had per diem. You had
Uh-huh.
a set rate.
Uh-huh.
You know, you're gonna get paid $75, meals and I, or, meals and entertainment, $75 for that day.
Okay.
If you ate, if you got ham sandwiches, you made money. If you went to, Ruth's Chris, you
Yeah.
lost money.
Yeah. You probably spent more than the
Does that
75.
fall under a capital reimbursement plan?
The church may do that. Yeah, you may do that. Most churches I've ever been in did actual expenses. I guess there was a little fear that you're going to try to make money on the deal, but you may do the daily per diem. Now, did y'all have a thing where it varied depending on what city you were going to? Yeah. The IRS has a chart about all that stuff. And if y'all want to, you may do per diem on travel. But if you do it according to what the IRS says.
Okay, on the move-in expenses,
Uh-huh.
What our new, executive director did was they sold their house, put their furniture in pods, and then they held them until he found the house in Mobile, and then the pods were delivered to Mobile. So we paid him back.
For the
That all went on
pods.
his credit card, and we paid him back. But that does go on his income, doesn't it?
Yeah, it's
Okay.
taxable. And if there's any expense that you think, well, maybe it's not, talk to a CPA about it, but basically moving is no longer a tax-free thing. The one exception is the military. They can move military members, and that is tax-free. I had hoped a little bit that would go away with this 2026 bill, but it didn't. All right, moving expense, and then benefits. Group health care plan, we've talked about, and then you may provide group term life insurance. You may provide, well, let's talk about that one before we leave it. If it's $50,000 or less, then it's tax-free. You don't put it on the W-2 anywhere. If it's more than $50,000, there is a taxable amount. It's found in IRS Publication 15B. And if you've got accounting software, that probably figures it for you. And there is a taxable amount, and it does go on the W-2. It is listed as in box 1. And if it's a regular employee, it'd be 1, 3, and 5. And it's also listed in box 12 so that they know what that money is. But you can provide, and you can provide, a lot of businesses and churches provide, say, 2 times income in terms of group term life insurance. That you can provide 4. You can provide more than 4 times income, but it's not quite as easy to obtain as 2 or 4 times. Disability insurance, dental, vision insurance, and then contributions to a retirement plan. That money can come from you, the church, or it can come from their paycheck, either or both. And when it comes from the church, it doesn't go on the W-2 anywhere. That's a benefit. When it comes out of their paycheck, it is not included in box 1, and it is included in box 12 when it comes out of their paycheck. But you can do that. Now, Guidestone does have a Roth version, meaning you pay the taxes now, and there is another thing on box, so you don't count it as a benefit tax-wise. And there is another provision for box 12 for that Roth money to go, and I don't remember the code letters for it, but you can do that. And for your regular church employees that are not ministers, it's really a pretty good idea to encourage them to do the Roth, because they're not making a huge salary, and typically, and so the Roth would be a great idea. And these days, for a married couple, you've got just about a 31.5 as your standard deduction. So you've got to make a good, fair amount of money before you begin to pay taxes. And then that's going to be at a 10% rate. And then a little bit beyond that is 12, and then it goes up from there. Okay, you may do some other things. Don't do an IRA. You're not supposed to do that anyway. You're supposed to do an employer plan. And then also, if you did it, it would be taxable money, because then they are going to deduct that IRA on their taxes. And then you can do other things like dependent care assistance. You can provide a benefit plan for that. Those need to be writing and need to treat all employees alike. You can do adoption assistance or a tuition assistance plan. But those have to be fair to all. One thing about tuition is tuition reduction. That one, let's say you have a school or you have a daycare. That tuition reduction is a benefit to the daycare or school employees. Let's say your pastor is considered to be the headmaster of the school, does chapel for the school, then he could get the reduction. Let's say the youth minister doesn't have a thing to do with the school, doesn't have any responsibility or anything like that, then his reduction would be taxable. So that's the way that works. Okay, on the next page, we've got a sample minister's W-2. And I'm going to skip these pages and go on to where you can kind of see it in print. On the next page, after that, you see a sample minister's W-2. So, here's where I was looking for that this morning, and I didn't find it, but some ministers ask, can you just pay my FICA and match my FICA, and can I just do that and be treated like an ordinary employee? That is IRS Code 3121B8A. And so you can find it. Can we pay FICA for an ordained minister? No, not for an ordained minister. Now, not for an ordained minister serving in ministry. We had a guy here a number of years ago who was a pastor. He was a bivocational pastor. But here he did building maintenance. And so here he was treated like a regular employee. FICA was taken out and FICA was matched, just like a regular employee. But then at his church job there, they treated him like a minister. So if the person is ordained doing ministry, you've got to treat them like a minister, and you cannot do FICA. Bivocational pastors, typical bivocational pastors make, on average, about $25,000 a year. And but now, bivocational pastors serving in a church, and by the way, if you need information about bivocational, it's on about page 100. There, where is it? 103. In 103 in the old book, so it's 104 in the old book. If you need that. So bivocational pastors ask me, can all my pay be housing allowance? Bivocational pastors serving a church of 50 to 100 average about $32,000 in pay. So somewhere in that range, 100% pay going towards housing allowance may fit their situation. And the answer is yes. 100% of it can be housing allowance. There is no dollar limit, there is no percentage limit for housing allowance. And the dollar limit really is a formula that they have to apply to their tax situation. It's not a fixed dollar limit. It is the lowest of three numbers. And y'all don't need to worry about that. The minister needs to worry about that. But they can ask for a little bit, housing allowance a little bit on the high side, and then at tax time, they'll have to reconcile that. And if they have leftover housing allowance, they report that difference as taxable income. Okay? So the answer is yes. But then I'll ask them, but it would be a good idea if you took some of it as taxable so that you can put money into your retirement account through the church retirement plan. Because if it's 100% housing allowance, they can't put any money in their retirement plan. You have to have taxable income in order to do that. And the way that Guidestone says it, they say you have to have a W-2 from a church to put money into a church retirement plan, to the church retirement plan. You have to have a W-2. And if you receive 100% as housing, you don't have to have a W-2. You just put that on letterhead. You receive $25,000 for 2025, 100% of which was housing allowance, is the way you do that. Yeah, it sounds like a microwave going off or something. I don't know what that is. So then if you have a bivocational situation and that pastor is the only employee, then and if it's housing allowance only, you don't need a W-2. You just give that to them on letterhead. If they have housing and salary, now you got to do a W-2. And if you do a W-2, you've got to do a W-3 and A3. W-3 is reporting, it's a summary of your W-2s, where you just got one to summarize. A3 is Alabama version of that. So if you have pastor as the only employee, then that's really all you've got to do. If you got any other employees, like a secretary or nursery workers or somebody else, then at that point, you're gonna have to take out FICA and match FICA and do a 941 each quarter. Okay, everybody all right with that? Okay, so ministry assistant, Mary Smith, I do want to go through these because they're a little unusual from what we normally think. This is just an example. It's not in your book, and the ministry assistant is not in your book, but let's say that this person is part-time, they make $12,000 a year. The church makes some contribution to their retirement. Church provides some group term life insurance, $50,000, so it's not taxable. And so they want to put another $1,000 into their retirement. And so here's the way the W-2 looks. It looks like anybody else's anywhere, working anywhere. But one thing that you do need to note is that when the employee puts money into their retirement, then box 1 is reduced if they're putting it in traditionally, not Roth. If they're putting it in the Roth version, then box 1 stays the same. But if they're putting it in a traditional way, it saves them on their taxes. And so box 1, this person put $1,000 into their retirement, and that shows $1,000 less in W-2 income for federal. But it doesn't save them anything on their FICA. And so you put the full $12,000 there, and it multiplies out just like normal. So that's one thing that's a little bit unusual. The church put some money into the retirement plan. Where is that on the W-2? Nowhere. Nowhere. It's a benefit. But this $1,000 is the part that she wanted to be deducted from her salary and put into retirement. And then down in box 12, put the $1,000 and code letter E. Code letter E means a 403B, and that's what Guidestone is, a 403B. All right? Now, let's look at the pastor's W-2. He's bivocational, he makes $25,000 a year. He wants $15,000 to be housing allowance. And now this example is on that sample, that W-2 sample that you got in your book. And so he makes $15,000. He wants 15 of that to be housing. The remaining $10,000 would be salary. Then he wants to reduce his salary by $2,000 to put that into retirement. And then he gets some group term life insurance in excess. Well, the example in your book doesn't show the life insurance, but I think I showed it here. Oops. So we started with $25,000. Then he asked for $15,000 to go into housing, so that's $10,000. Then he wanted $2,000 to go into retirement, so we end up with $8,000. Now, the example in your book is simpler than this. I don't have the life insurance, but he had an amount over $50,000. It created $12 of taxable income, and that's included in box 1 and 16, but it's also listed over here. The $2,000 is retirement that he chose to put in, withheld from his salary. Okay? So that put $8,000 in box 1. And in box 12, we've got $2,000 with code letter E. And the life insurance, $12 with code letter C. That was listed as the taxable amount. Now, on a minister's W-2, 3, 4, 5, and 6 are always blank. Always blank. You cannot do FICA on an ordained minister. 2 is blank in this case. 2 could be an amount. He could ask you for federal withholding, and he could do that. So he could have an amount there. But in this case, his box 2 is blank, but just 3, 4, 5, and 6 are always blank on an ordained minister. On an ordained minister, if you've got an amount in those boxes, you've got a mistake you've got to correct. And the only exception to that I know of would be a minister who was ordained during the year. And I get that question every once in a while. And if that minister was ordained during the year, then you could have some amounts in box 3, 4, 5, and 6. And then you should put down in box 14, which is an information box, you should put ordained May 1st, 2025, or something like to explain why do we have FICA taken out on some of the income but not all of it. So this is what a minister's W-2 looks like. Healthcare is not required on the W-2. And unless you've got 250 or more employees, I don't know of a single church anywhere that's got 250 employees. I would guess Church of the Highlands probably does. But I don't know if they're all on one payroll system or what. I don't know. Anyway, no Baptist church that has 250. We've got a couple of churches that have over 100 employees. Anyway, this is what a W-2 looks like. Any questions about a W-2? This part's really important because if your pastor's W-2 or other ordained minister's W-2 looks different from this, you may have a mistake.
I was doing our W-2 and I use a program because that's the only W-2 I have to do. And it forced me this time, because he does 100% of his salary, everything is housing allowance.
Okay?
But it forced me to put at least $1 in box 1.
Yeah.
And, I mean, I've used the same, company, electronic, they do it all. I just thought that was curious that all of a sudden I had to put $1 in there.
Yeah, and Richard Hammer is the nation's leading tax authority regarding ministers, and he says you can do a W-2, but it's very confusing. In that case, it's all housing allowance. And so he recommends to do the letter. You received $25,000, 100% of which was housing allowance in 2025. You can't have a W-2 with no income. That's what the software program is telling you.
It let me do it last year.
With what, it ended up with with a W-2 but a zero?
Box 14, I always put it.
Put the housing to explain it?
So would it be a problem if like next year, he doesn't have a W-2 and he's had one in the past? Alert that?
Well, you'd have to take him off of payroll in order not to get a W-2, right?
Well,
No, he's on the payroll, all his salary
Goes to housing.
His housing allowance.
well, I mean, to me, the simplest thing would be truly pay him $1. If you give him a W-2, it's confusing. But now personally, I don't see a problem with not doing a W-2 next year and just doing the letter. But check with that accountant and see what their opinion is.
No, he's got
Yeah,
only-
and
He's over
Well, a suggestion, even if I was old, well, I am older. And I'm still putting money into my retirement. So it's a good idea to do so. So, be a good idea. And then if he's going to do that, he needs some taxable income. So you can't put more in than your taxable income. So he'd have to have a $1,000 taxable income or $2,000 taxable income, and then he'd have the retirement.
On that same note, if they have a mileage reimbursement, which is not taxable, I do taxes, and I have a printer that brings a letterhead saying they paid him X amount of dollars. 2/3 of it, or 3/4 of it, is housing allowance, and then the other 1/4 of it is like, they paid him $24,000. $20,000 was housing allowance, $4,000 was mileage.
Did he justify that to the church every mile?
And I asked him, and he says, no, they just automatically.
Then that 4,000 is
And I told
taxable.
him, I said, well, when the IRS audits you, then you're gonna be in trouble. Don't
Well,
let me.
he really shouldn't wait on the audit. It's taxable. And it really what he needs to do is to have that as an accountable plan, do mileage, they could reimburse him for a cell phone, those kind of things.
Because I told him, I said, you have to drive 800 miles a month. And he said, well, my church is like 70 miles one way. And I said, that's
That's
not,
your commute.
that's commute.
Yeah.
So I've been dealing with him for like 5 years, and
Yeah.
he's still doing the same thing.
And that thinking among ministers is not that unusual.
I mean, I
It's really
go to
not.
this church and explain to them they're doing it wrong, but
All right.
it's what it is.
So this is what the W-2 looks like. And I covered up box 14, but it's right there. And you could, if you wish to, you may put housing allowance $15,000 in this case. And that's the term the IRS uses. They say you may include housing allowance in box 14. It's not required. For years and years, we've recommended not to, just keep the W-2 very simple. But now there is one reason that it's good to include it. If they want to get a mortgage, it's good to be included on the W-2. I know there was at least one minister who called me and had a problem with they got it done, but they had a problem. Mortgage company didn't want to take his word for it about housing allowance unless it was on the W-2. So you may put it in box 14. Okay, 941 is on the bottom of that page. And I haven't done the whole 941. I just want to show you some things that are a little different about church. So in box 1, how many employees do we have in the example that I just gave you? 2. How much money did they make this quarter? And so he made $2,000 taxable, and she made $3,000 taxable. But then, of course, she got a tax break on the amount that she put into retirement, so that's minus $250. So the amount for this quarter was $4,750. So that pastor is included in the employee count. And pastor is included in terms of his federal taxable income. Then we put down how much was withheld in federal taxes. Then we come down to 5, and we're going to deal with the FICA. So you don't include his money anymore. You include hers. And so $3,000 times 0.12, what is it, 12.6%, isn't it? and then 2.9%. So you're dealing with the FICA there in the fifth box there. Then you list how much was withheld in federal income tax, and so he did not do it, so we just list hers. But the point that I'm making in this 941 is he does count in number of employees, and his federal wages do count in that box, but they don't count down here where we're dealing with FICA. Okay. Everybody on board?
I have a question.
Yes.
Line 2, where it says tips and compensation, would moving expenses be included on the 941 as other compensation, or would you just have their wages?
I think so. I'm not a CPA, and I'd check with them on the specifics about how to do it. I was just thinking, the other thing that I was thinking is, when you list it as other compensation, how does it calculate? For example, here's an example. We used to have a 1099 miscellaneous. That form still exists, but we don't use it anymore. We use the 1099 NEC, which stands for non-employee compensation. But back when we had the 1099, and this is the reason they changed it was so confusing, because you had other compensation and then you had non-employee compensation. And you had both of those boxes on that form, and it made a difference in your taxes, because if it was listed as other income, it didn't show up for Social Security purposes. It didn't show up for having to deal with it there. But if it showed up as non-employee compensation, it was part of the Social Security calculation. So that's where I'm not sure the answer. And I would check with an accountant about that. Okay. Then we'll need to do a W-3 and an A-3. And then we have the we have the A3 quarterly, the A1 quarterly, and the A3 annual summary of W-2s. That's for Alabama. And if you have more taxes done, you might have to do the monthly Alabama form. Okay. All right. What other forms? We have to do 941 quarterly, and then we have to do our 1099s. Now we're ready to go. We've been on this road, going down the road of employee. Now let's skip back over to the road about non-employee. So for them, we've got to do 1099s, and in addition to the 1099, we'll do a 1096, which is, again, a summary form. It summarizes all your 1099s. So for 2025, anybody you paid $600 or more to that was not an employee, you'll give them a 1099. And this is what that 1099 looks like. It's a 1099 NEC. I didn't put it in your book, but it's a 1099 NEC. It's very simple. You just fill out their name and address and all that information, and the church's name and address and all that. Put their wages there in box 1. And that's really it. Okay? 1099 NEC. Do not use a 1099 miscellaneous for what we're talking about. And then one more thing about the 1099, always obtain a W-9. When you realize you're going to be paying somebody and they're not going to be an employee, get them to fill out a W-9. Do it early. And in fact, if you haven't paid them yet, say, I've got your check ready, but I need you to fill out this form before I give it to you. And be sure and do it that way. Don't give it to them until you've gotten them to fill out W-9.
Sometimes you have to tell them you're gonna hold full 28% back.
Yeah.
Then they'll fill it out.
That is the case. If you don't obtain their Social Security number, you're still, you know, this is weird. If you don't obtain their Social Security number, you're still supposed to do the 1099. When you do the 1099, you're going to get penalized for not having a Social Security number, and you're going to have to do 28% backup withholding. And if you have already given them the check, where's that backup withholding coming from? It's coming out of the church's pocket. And so you really want to do that. And if you haven't given the check yet, tell them you've got to fill this form out before I can give you your check. Okay? W-9 gets their name and information, and address, and all that stuff, and it tells you whether they're going to need a 1099 or whether they are incorporated. If they're incorporated, you don't have to do a 1099, and it gives you that information on the W-9.
I have a question.
Yes.
It says, is the W-9 for anyone who does work at your church, like plumbers, contractors, et cetera?
Yes, anybody that does work at your church, like plumbers, contractors, people like that, who are not incorporated. And you get, well, you get the W-9 to find out if they are incorporated or not. And so it's a good idea to give a W-9 to almost anybody. Now, obviously not major corporations like Alabama Power or something like that, but if you have the slightest doubt, or if they're relatively small, I would get them to do the W-9. And it tells you for sure. That's a great question.
Is it on them if they fill that out?
Okay, if they fill out the W-9 and you've got their Social Security number, then you're not going to get penalized. If they fill out the W-9 incorrectly, you would not get penalized. That would be on them. Okay, what about other forms? There is one form that you might possibly have. If your church has unrelated business income, you may have to fill out a Form 990T. Now, churches do not fill out the Form 990, and you don't want to do the Form 990. It's for all other charities except churches. But the 990T, you might have to. And what that is if you have unrelated business income, it might possibly be taxable. And that's the form where you find out if it is taxable, and if so, how much do you have to pay. So businesses, here's a business, like if your church operates a bookstore open to the public, if your church operates a coffee shop open to the public, if your church buys up, let's say you need more property, and you buy up houses all around you, and you use the rental income from those houses to pay off the mortgage, you might have to do the 990T. If your church has a cell tower on the property, you might have to do a 990T. So it's unrelated business income. Okay? If your church is selling all the time. There was one church I talked to, they had a flea market every month. You know, not just a one time and you're done, but I mean it was every month like clockwork. So that is a business, and it is unrelated, and they would have to pay tax on that. Okay. And one more form. If you have a daycare or school, you might have to do a Form 5578. That's your statement. It's just a half page. It's just simply a statement that we do not discriminate on the basis of race. That's all it is. for any daycare or school. That one is due the 15th of May. Things. Take out, keep your book handy, your black book there, keep that handy. But take out the compensation planning guide out of your packet. We're going to fly through this real quick. But also, in the old book, I think it's page 66, I think. It's in your new book, it's page 65. This tax changes and sample policies. All right, so mileage rate 2026 is 72.5 cents. The business mileage rate, what you can reimburse. And you'll notice that one thing that's interesting, the mileage rate for medical actually went down. See, it went from 21 to 20 and a half. So what they're saying, you know what they're saying here? They're saying gas is cheaper, but cars are not. Gas is cheaper than it was last year. But the average vehicle in the U.S. today, new vehicle, is $51,000. The average used vehicle in the U.S. today is $26,000. So in that 72.5 cents, a lot of what you're paying for is depreciation. That car is going down real quick in value, and that's what that cost is. So 72.5 cents. I've listed for you the maximums on retirement contributions. Like somebody gets to be in their early 50s and they say, oh my goodness, we haven't done hardly anything for retirement, and the kids are all gone out of the nest now, and I've got to catch up. And so how much can I put into my retirement? That shows you how much can they put into their retirement. It's very generous, so that'll be a way that they can rearrange their budget and things and start to catch up. You do have catch-up provisions, and so a person can put $24,500 from salary reduction into their retirement, but if they're over 50, they can put an additional $8,000. If there's certain ages like 60, 61, 62, right in there, they can put even some more money into their retirement. Also, if they're 62 or over and they want to start taking their Social Security, but they still want to work for the church, and they want to know how much can I make from the church without affecting my Social Security payment, and that amount this year is $24,480. Beyond that, some money is going to be taken away from their Social Security check, and it's $1 for every $1 for every $2 above that threshold. Now, when you get to be near retirement age, in the year that you turn retirement age, it's $1 for every $3 over that. And but you can get with the Social Security Administration, especially that last year when you're about to turn full retirement age, and that last year you could get with Social Security and say, well, how much can I make this year? Because it does increase how much you can make. The child tax credit went up, as you see there. The Social Security COLA that began in January for those who are receiving Social Security, it is 2.8%. And that is based on the Bureau of Labor Statistics cost of living adjustment, or the index, the cost of living index, whatever it's called. It's based on that. So you'll see those figures there. All right, let's take out the compensation planning guide. I want to point out some things to you. So as we open it up to the first page, we want to do well with compensation. We want to do the best that our church possibly can, and there's even biblical support for that. Second, we don't want to do the lump sum anymore, the package approach. And for decades and decades and decades, we've been saying to ministers, here's X number of dollars, you divide it up any way you want to. Don't do that. Have a system of salary. Ordained minister chooses how much they would like to request for housing and benefits. Do it in that manner, and that we're going to reimburse you for business expenses. So don't do the package anymore. Number 3, the eligibility requirements to be a minister for tax purposes are down at the bottom of that page. And they are ordained or licensed, and they lead worship, they lead the ordinances, they are considered to be a religious leader by your church, and they administer the organization. And then if they are a minister for tax purposes, then they are entitled to a housing allowance, but they've got to pay their own self-employment tax, like we've talked about. And so that number 3 just tells you a little bit about that part. So we want to do a plan, and we want to do this the best way. So step 1, we're going to outline the needs. What do they need for business expense? What do they need for this and that? And we have a worksheet. I'm going to move on to step 2, establish written financial support plan document. How do we do this? What benefits do we provide? Let's put it in writing. And let's put in writing that we have an accountable reimbursement plan for business expenses, and that's the way we're going to handle it. Put in writing, how do we do personal income and housing allowance? And then finally, your other personnel policies as you wish. And that would be vacation and sick time and sabbatical leave for ministers and other policies as we want to have. Okay, step 2. Step 3, we want to provide for ministerial expenses, business expenses. And we've talked some about that. It can include mileage. It can include books and tapes and periodicals for sermon preparation. It can include continuing education. It can include hospitality, which would be, taking a prospective member to lunch and tell them all about the church, answering their questions. It could be the pastor taking the chairman of deacons and talking about plans for all that we're going to do for as the deacons for this year, that sort of thing. But a lunch, to be reimbursed, it's got to have a business purpose. Can't just be you take the chairman of deacons because he's your fishing buddy. You got to have a business purpose. And then down at the bottom of the page, you've got your IRS rules for that. It's got to be documented in writing, showing the date, place, purpose, the number of miles. If it involves a receipt, you turn in the receipt. It must be done at least every 60 days. At least every 60 days. And the written report. And you may do per diem if you wish to, but like I said, most churches that I'm familiar with do the actual expense. Then on page 8, wait a minute, did they change that? Or is mine stuck together? Yeah, page 8, bottom of the page. This is very, very important. Your accountable reimbursements for business expenses. See that caution down the bottom, that yellow, and the caution triangle and circled? It says that these accountable reimbursements must be done from employer money, not employee money. Can't be done from salary reduction. You can't reduce the salary to create business expenses. It's got to be separate. And we recommend keeping that section separate from the salary section, that it's business expenses. All right, so you want to do that right because let's say that you just didn't do it correctly and it was created from salary reduction and the minister doesn't know this right here on page 8, and is audited. And the IRS says, well, tell me about your business expenses. How is that done? Oh, they reimburse me, and it's accountable so that I turn in a report showing date, place, purpose, and number of miles, and all that. And they say, well, is this church funds, or did they do this from salary reduction? Oh, they reduced my salary, but it's okay. That's the way we set it up. Well, then they're going to say, nope, that's not an accountable reimbursement plan anymore, and we're going to make all that money taxable. So you, the church, you want to do it correctly here. On page 9, you've got kind of how to set up an arrangement. On bottom of page 9, sort of a sample expense report. And we do ours here at the State Board of Missions on an Excel spreadsheet. So it's real simple, doesn't take long to fill out, and get that turned in. It's got to be done at least every 60 days. Now, step 4, provide employer benefits. And so that's some of the things we've talked about health insurance, term life insurance, disability insurance, things of that nature. And then on page 11 is about the retirement plan. I think we've covered everything about the retirement plan. It's a great plan. They have some extra benefits. They are competitive with secular companies. And for an ordained minister, they can put that money in a traditional way. And then when they get to be retired, fully retired, they can take it out as a tax-free housing allowance. So it talks about that some here on page 10 and 11 and 12. Okay, step 5, we think about personal income, and so you can have a Social Security offset for your ministers. That's where you say, hey, Pastor, you are our employee, and for all these other employees, we take out and match FICA. So some of the FICA money comes from the church. We can't do that for you, but we're going to give you the money, our half. We're going to give that money to you, and that's a good thing to do. It is taxable money. It's taxable, but it's still a good thing to do. And then down the bottom of the page, how do we do housing allowance? So step 1, the minister makes a request for an amount, and then step 2 on the next page, the church officially approves and designates that. That's also step 2 is on the bottom of the next page. And so it cannot be retroactive. So you can put in that wording, and that's mentioned here in step 2, that wording, this housing allowance is in effect for 2026 and all future years until changed. You may do that. The upper part of that page gives you a list of all those things that the minister can include in a housing request. So payment, including principal and interest and taxes and insurance, remodeling, repairs, maintenance, utilities, furnishings, homeowners association dues, all those things can be included in the request. Okay? Then we put it all together. We put that in writing, and on the next page there's a sample of how you can put that in writing. And then step 6, you complete all of this into one thing showing how we do compensation. And this is the way we do it. I just really went through that really fast, but it's such an important piece. I think this piece, Compensation Planning Guide, is the best piece that Guidestone puts out there. And it helps. You could actually get some more copies of it, say for Finance Committee or Personnel Committee, that you can request. We've got some more in the office. All right. Take a breath, and then let's move on to contributions. Okay? We talk about contributions basically every time we get together. And in the summertime, we talk about contributions from the standpoint of of what are some policies that we should have in place. In January, we talk about contributions from the standpoint of we've got to put out these statements, and that's got to be done, supposed to be done by January 31st. There is no legal requirement for you to get it out by January 31st, but you should. And that's the recommended date from the IRS. So page 46, I think, in the old book, it'd probably be about page 42 or so in the new book. So we look at these 6 things. There are six parts to charitable contributions that are tax deductible. So number 1, it is a gift of cash or property. I'm just going to list the 6, then we're going to come back to it. It's a gift of cash or property. Number 2, it is noted in the year given. Number 3, it is it is unconditional without personal benefit to the donor. Number 4, it is to and for the use of the charity. Number 5, it's within allowable legal limits. And number 6, it's properly substantiated. And that last one, number 6, is the most important part of what we're going to do today. So let's talk about some of these. There's an additional IRS requirement that says anything designated to a particular individual is not tax deductible. And really and truly, that's already in the 6 requirements that it is unconditional. Well, if you're going to say it's earmarked to a particular individual, well, that is a condition on it. But we've got to have these be unconditional. So it is a gift of cash or property. We're going to go back to number 1, gift of cash or property. Cash means cash, checks, bank transactions, credit card, things like that. Property would be anything else, merchandise from Walmart. It could be VBS supplies. It could be a used computer. They could give you a car as a donation. And they could give you stocks. They could give you those kinds of things that are non-cash. And you've got to separate that on your statement because the IRS is going to ask on the tax return, the IRS is going to ask for it that way. List your cash contributions, then they're going to list your non-cash contributions. Under number 1, there's a couple of different things that are listed there that are a little different. Time and labor are not tax deductible. Time and labor are not tax deductible. So if you have, and this is the way this happens. It happens a lot with the trades. An air conditioner guy or a carpenter or somebody comes in, does some work for you, and then they say, here's my bill for $800, but I tell you what, why don't you, instead of paying my bill, why don't you just put that on my contribution record? And you can't do it. Time and labor are not tax deductible. Time and labor are not tax deductible. Now, if they want to separate the bill into parts and labor, then you could, and they wanted to donate the parts would be a tax deductible giving thing, but not time and labor. They might want to, there is a way to do it. You pay their bill. Then they turn around and write you a check and say they write you a check for $800. Well, that is a tax-deductible gift, $800. But the $800 you paid them is taxable income. And they'll have to pay Social Security taxes on it, and that they won't get any, they can't get that money back. So they can do it, and some people might choose to do it that way. They might feel like, well, I'm kind of ashamed of how much I've given so to the church, so let's do it this way. And they might want to do that, but that's the only way you can do it, if they want to do that. Okay. It is unconditional. And so can we do a love offering for staff? I thought that sounds kind of conditional. Yes, you can. But you've got to do it, where the church sets the time to do it, how to do it, how it's going to be divided up, and all those criteria about the gift. Now, one more thing about the gift is the church must give to that minister or to that staff member what is reasonable. What is reasonable. And I say this all the time, and I've never heard of an instance in a Baptist church where this is a problem. But I need to say it because you need to understand the control. This offering needs to be reasonable. Can't make their compensation unreasonable. One of the IRS requirements about any charity, including churches, is that all compensation must be reasonable. If we're getting money from the public and, from donors, and we're giving a tax deduction for those gifts, then it must be reasonable. The United Way, the national leadership of the United Way, about 25 years ago, they got in huge trouble because even way back then, they were making in the millions. And they got in trouble with the IRS about that, it was unreasonable compensation. And so they can even, if you're giving unreasonable compensation, the IRS can actually take away your tax exempt status. Now, like I said, I've never heard of this as a problem in a Baptist church. But you, the finance committee, church leadership, you do need to assure that it is a reasonable offering. So if the pastor's rich uncle, let's say you've only got 2 staff members, pastor and a youth minister, and the pastor's rich uncle is in the congregation and says, well, I'm gonna give $75,000. Can you do that? No, because that would make the compensation unreasonable. So you tell that person, hey, we can't let this amount go as the love offering, as a part of the love offering. We may decide some of it to go for the love offering, and then if you don't mind, we'd like to have some of the rest of it go towards the building fund. But you can't give that full amount to them. It would make the compensation unreasonable. Anybody have a church give $75,000 in a love offering? I didn't think so. But I am giving that ridiculous example to say your church must control the offering. That's what makes it tax deductible, is that you controlled all the circumstances around that offering. Same thing with a benevolence offering. Somebody's house burned down, and everybody knows it. We take up a love offering for that family. Well, you need to tell the folks, everybody, we're going to give that family according to the need. If we should get more money in than what the need is, you just know that you'll be helping some other families. And you say it that way because you've got to control that. I've had a number of churches that said, well, we took up $5,000 for that family, and then later we found out, well, the need was just $2,000, and we didn't know what to do, so can you fill in the rest of it? We gave it all to them. And see, that's not proper. Your giving to a needy family should be according to the need. So you got to control it. Unconditional, without benefit to the donor, and to and for the use of the church. The IRS has a list of contributions that are not tax deductible. Very first thing on that list is earmarked for specific individual. Down on the later on in that list is contributions of time or labor. So, and contribution of the use of property, not the property itself, but just simply the use of it. That's not tax deductible. Now, on the old book, I think this is about page 51, should be about 48 or 49 in the new book, substantiation. And that's what we're really all about today, substantiation. You do a report, a statement that you give to your members, and you should strive to get it done by January 31st and out to them. Well, one thing, at the top of that page, it says that members should not file their taxes until they have received their statement from the church. And the IRS uses a word there called contemporaneous. And when I hear the word contemporaneous, I think at the same time. So my first thought is, well, you got to send out a statement once a week. No, that's not what the IRS means. They mean that it must be in their hands before they file their taxes. That's what they mean by contemporaneous. And like we said earlier today, if they don't have it in their hands and the IRS should audit them, the IRS could deny their contributions. So it is contemporaneous. And then ask them to wait. What needs to be on there on the substantiation should say the name of the organization and then the date and the amount of each contribution. And then at the bottom, it must say no goods or services were given in exchange for your contributions. Now, there's a few variations of that wording. One of the variations adds the terminology unless otherwise noted. And another variation of that terminology says except intangible religious benefit, I think is the way it says it. But anyway, that wording or some variation of it's got to be on there. Yes, ma'am.
If ours were already given out and it was just a sum total, not itemized, do I need to go back to the person who did it and ask them to go back through and itemize it?
Here's the real rule. And I'm glad you brought that up because I've kind of bended the rules just a little bit. I suggest itemize every gift, $5, $10, $50, $1,000. Itemize every gift with date and amount. Now, here's the real thing from the IRS. If that gift is $250 or more, it must be itemized. If it's less than $250, it could be conglomerated. So you might need to, if you've got some people who give more than $250 at a time, you might need to get some new statements done for them. And I personally just like the everything itemized because it's just easier to do that than to figure it out. And then the other thing, if they ever have a question, hey, I gave $100 on July 31st, where is it? I don't see it. Well, if you've itemized everything, then you can find it. But if you haven't itemized it, you don't know whether it's in this conglomeration or not.
So you don't have to give like a check number or anything, you just, as long as you do the date and amount?
Check number's not required. It's a good idea, but it's not required. But if you're doing check number, continue to do it. Okay, good questions. Okay, and then if it's a gift of property, merchandise, anything of property, then you tell about that property, you describe it, but you don't give it a value. You don't give it a value. So, you could list 100 packs of crayons and 50 packs of construction paper and this, that, and the other. Somebody donated for VBS. You would list those things, but you wouldn't tell how much it's worth. That's their responsibility when it's a gift of non-cash.
Even if they give a receipt
Mm-hmm.
for it?
Just type up your letter or whatever, and then give them their receipt back. They can keep the receipt to prove it, but you don't. If it's non-cash, you don't put a value on it. And some of your software will handle that, where you list, where you list the items and what they gave and things like that, and then it won't put a value on it.
Online it says, do you include the gifts in kind, like a guitar, sofas for youth, and all in the same contribution statement?
Do you include the what gifts?
Do you include gifts, like a guitar, pianist, a sofa for the youth room, all in the same contribution statement?
Okay, did y'all hear that question? Do you include things like a guitar or things like that all in the same contribution statement? That depends on how you're doing contribution statements. If you have one of the software companies like ACS, it will allow you to put in contributions of cash, and then it'll allow you to put in non-cash. And the non-cash, you list what it is and the date they gave it and that sort of thing. Describe it, but you don't put a value on it. And ACS or whatever company you're using won't let you put a value on it. And if that's the case, like ACS, you would end up with it in the same statement, but you'd have cash contributions and then non-cash contributions. If you're doing all this by hand, you may want to do that donation of, say, a guitar or something on a letter. You might want to do it that way if you're doing all of this by hand rather than by computer. And you would state in the letter, thank you for your donation of the guitar, describe it, such as, say, January the 8th, 2026, no goods or services were given in exchange for your contribution. And if you do a letter rather than put it on the statement, that letter's got to have that wording on it also. Okay, good. That's a good question. So it depends on how you're doing your contributions. Okay. All right. Now, if they give something, this is called quid pro quo. Quid pro quo, this for that. And that's a kind of a donation that they might give, and it means they did get something in return. And if they did get something in return, you would tell about that and give an approximate value. So, we do the car wash or the spaghetti supper or the whatever, and we say, hey, this is a free supper, just donate to our youth that are going to camp. And it's all free, just make a donation. And somebody, I guarantee you, somebody will put in $10 and say, would you put that on my giving record? And you'd say, no, I can't do that. You got a dinner worth $10. So if they got something in return that's worth about what they paid, it's not a donation, really. I mean, you might call it a donation, but it's not a tax-deductible donation. So what you would do, there is a method for that. If they want to take your $10 dinner and give $100 to it, you may write them a thing out saying, thank you for your donation of $100 given on such and such date. And instead of saying no goods or services were given, you would say, in exchange for your contribution, you received a dinner worth approximately $10. And so you list what they got in exchange if it's that way. And we do that sort of thing on car washes and dinners and things like that. So generally, for those events, you're generally not going to do statements about those because you don't have to do a statement at all unless the donation is $75 or more. And now, let's take a cake bake sale. Who gets the contribution? Well, the person, now here we do some cake bakes and give the money to missions and to the Myers-Mallory offering. And some of those cakes might go for $100, $200. And so you could give a statement, thank you for your donation of $200. In exchange, you received a cake worth approximately $25 or whatever it would be worth. The maker of the cake could get a donation listed for their ingredients. You know, you bought a pound of this, pound of that, and so forth, and this is how much it all costs. And that would be a donation, but not the labor. Not the labor, but the ingredients. So that's the way that would work. Okay, any question about, it's called quid pro quo. Okay, and then down at the bottom of that page, if it's less than $250, the IRS will accept a canceled check or the statement from the church. If it's more than $250 or more, the IRS will accept only the contribution statement from the church. So you go in there and you say, hey, I don't have a statement from my church, but here's all these canceled checks, and I can prove that I donated this amount. And the IRS would say, nope, you can't do that. You've got to have a statement from your church. And they'd also say, and now it's too late. That idea of contemporaneous that we were talking about earlier. So $250 or more must be substantiated by the church contribution statement. So those statements are very important. Some of these gifts, like I heard about the one the other day that was $50,000. And then there was another gift that was property that I think it was worth several $100,000, I think. Something, I don't recall exactly, but I was thinking now, if you get an unusually large gift, you might want to get with a CPA or somebody like that and just make sure that we've crossed all the T's and dotted all the I's. On the next pages, you've got, these are about page 55, somewhere in there, 53. You've got some things about specific things. Non-cash gifts, here's the procedure. Gifts of automobiles, this is the procedure. Gift of commonly traded stock, here's the procedure. And what you're going to do, if it's, now those pages, you look at that and you say, oh my goodness, that's a lot of work. But most of the work is on the donor, not you. But I've given both instructions, and I start the one for the donor always with donor has to do this. Donor has to do this. So it's not quite as bad as what it looks like. But if you have a non-cash gift and it is, then you're going to do that letter like we've talked about, or if you've got something like ACS, you'll be able to put it into your computer. But if it's worth $500 or more, notice this, the donor has got to get a Form 8283 done. Did I say that right? Yes. I always get those numbers mixed up. 8283, but see, it's donor responsibility. If it's worth $5,000 or more, the donor has to get an appraiser to do an official appraisal on that property. And the appraiser signs the appraiser part of the form. And then if it's worth that much, the church signs it, not that you're attesting to the value of it, but just simply that, yes, we did receive it. We did receive that piece of property or that car or that whatever. And so then if you sell the piece of property or dispose of it, then you've got to fill out the Form 8282. And that one is your responsibility as a church. So when these get into more money, you do want to note those responsibilities that you have. And you'll have those pages there just for reference. You don't need to memorize all that stuff, but just use it as reference as you go. All right? Everybody okay? Now, let's go on to I've done those property donations. are about, was I pretty well correct on the pages? Somewhere in there. All right, let's go to, in the old book is page 48. What it should be about page 46 in the new book. Somewhere around there. Mission trips is what it says at the top of the page. 45. A mission trip is a tax-deductible event as long as there's no significant element of personal pleasure or vacation. See at the top of page 45 or 48, whichever page it's on, a mission trip. And what that means is, yes, you can do some sightseeing. Yes, you can have some fun. Yes, you could go out and eat at a nice restaurant. But the majority of what you do has got to be for the mission trip purpose. And Richard Hammer gives us the idea that have at least a 6-hour work day for the mission trip, at least, and the activities that you're doing for the mission work. And those activities could be VBS, could be evangelism, could be church construction, could be disaster relief, whatever you're doing as a mission trip. Have at least a 6-hour work day. The other thing that he suggested was have at least 80% of the itinerary devoted to the mission work. You could look at it either way. And then you've met that definition of a mission trip, and that is a tax-deductible event. Do any of y'all go to Mission Fuge? Y'all do? Okay. Anybody else? Okay. This has been kind of controversial, and I think I've got it figured out. Mission Fuge has 2 tracks, and they have a track for doing mission work. They've got another track for doing other things. What are some of the other things? Bible study and...
Bible study within the group. They pretty much just kind of stay together as a church youth group or whatever, or you always choose to go off-site and do the actual mission work.
So, through the years, I've had people who did Mission Fuge say, oh, it's a mission trip. I've had some that said, well, maybe not, it's not, I don't know. And I would say, so if you pretty much insist on your group doing the mission work and following that track, I think you could count it as a mission trip, because what I understand is the mission work is at least a 6-hour workday. If you let them choose, and you really let them choose, and a lot of them don't choose the mission work, I think you ought to not count it as a mission trip. And then if you want to, and if you want to say it's not tax deductible, if you just want to say that, I'm okay with that. But if you're wanting to count it as a mission trip, I would push people to, let's do the mission work. This is going to mean, down the road, this will mean a whole lot more to you to have that experience. So that's my suggestion. Most of us do a whole lot more than 6 hours, and we work all day long. Or, these disaster relief and Carpenters for Christ and those kind of groups, they work really hard. But have at least a 6-hour workday. Then, what about it being tax deductible? Well, first of all, for the adult going, and they're paying their way to the church, that is a tax, and the church is paying for the lodging and the airplane ticket and that sort of thing. That is a tax-deductible donation, okay? But it needs to be non-refundable. Remember, if you're making a contribution, it's got to be unconditional. And if we want our money back, then that's a condition that we're putting on it. So it needs to be non-refundable. If you don't go, you'll just be helping other people to go. You just tell them that. Tell them up front. Yes, sir?
But if you refunded it, they wouldn't be able to claim it anyhow, would they?
Well, if you
Because it's on the statement then.
yeah, if you refunded the same year, then you'd be taking it back off of their statement. But sometimes we are starting to take up money in one year and go in the next year, And then you could get into kind of a mess with that. So if I'm an adult and I'm going and I'm paying for my trip into the church, that is a tax-deductible contribution. Number two, I could be a person not going, but I just want to give to the mission trip. And I can do that and it be a tax-deductible contribution. But I cannot designate who it goes for. And then number three, and Richard Hammer says it a little differently than he used to. It's a little bit confusing. But he says if it's a parent paying for their child to go, then it is not deductible. Well, I thought you said it was. Well, hold on a minute. He says it is not deductible unless it is done in such a way that it is a legally binding agreement that the contribution is to and for the use of the church. And so, in other words, it's non-refundable. And you need to tell the parents that up front, that it is non-refundable. Okay? So those donations are tax deductible. Now, one more that I want to mention. Let's say that the person pays their own way. None of it goes through the church. They pay their own way. Sometimes disaster relief people do that. Sometimes Carpenters for Christ type groups do that. They pay totally their own way. They could get a statement from the church, thank you for going to Michigan such and such date to build a new church and on our mission trip to do that, and you give the dates. And then they keep that to show that it really was a mission trip, not just a pleasure trip. And so that's a simple statement you could do for any kind of group that's going and totally paying their own way.
Okay,
Yeah.
that somewhat answers my question, because we go to South Dakota to the Indian Reservation through Send Relief. And I know when we make payments to Send Relief, they can count that as their tax.
Contribution. Mhm.
But we travel on our own. Some people choose to fly, some people choose to drive. Can I still give them a letter and state they
Mhm.
chose to fly, and are those tax deductible?
Yes, their expenses.
Do I need to do that through contributions, or just give them a letter and let them file taxes?
You could give them, well, it doesn't really fit in our usual category of contributions. So I think I'd just give them a letter. Thank you for going on that Send Relief mission trip. And your expenses to go on that trip are tax deductible, and you give the dates and the purpose of that trip.
So we just
And
do
it-
travel and meals, because Send
Be-
Relief, the money
yeah.
we send to Send Relief goes straight from the church. They pay the church, we send the money to Send Relief.
It would be travel, meals, lodging.
Okay.
Do they have any other expenses? Whatever they're paying.
Yeah, it's basically just travel, and the branch feeds us when we're there. So it's really just travel and lodging.
Yeah. And so if they have a sightseeing day, it doesn't include sightseeing.
Okay.
That would not be tax deductible.
Okay.
Those sightseeing expenses would not be. All right. One more thing that I want to do before we quit. Down the bottom of that page, repurposing designated money. And I mentioned early today that we were going to talk briefly about this, that I did have an answer for that. If you have set up a designated fund and you've decided we're not going to do that, and we want to change that designated fund, there is a two-step process to change it. You've made a promise. You've really entered into a legally binding agreement with your donors that we will allow you to give to this purpose, and in exchange, we're gonna promise that we're gonna do that. And so, if you want to change it, it takes a vote of the church and contacting the donors to get their permission. Now, in almost every case, we say, well, that's impossible. That's impossible. So if that's the way, then there is another way. There's one more way that might be appropriate. And this is down at the very, very bottom of that page. If the amount is less than 50,000, and if it is more than 10 years old, and you cannot do that, it's impossible, unreasonable, or illegal to do it, then you may contact the Alabama Attorney General, notify him of your intent to change that designation, and wait 60 days to make sure he's okay with that. See about if he wants to change that or say no. He could, but you wait 60 days and then you can change it. Of course, you'd want to have a vote of the church to ask for that. Yes, sir.
Is each designation 50,000 or the money that you want to designate 50,000?
The money it's already designated, but we want to change it.
Well, I know, yeah, but I'm saying, okay, he gives 10,000, he gives 5,000, he gives 50, he rounds up, comes up to 50,000, that's 50,000. Or if
Right.
one individual gives 100,000, you get 20.
If the total though is 100,000, I think I'd contact an attorney and say, is there any way we can deal with this? The easiest thing is, can you legitimately spend the money for the reason it was given? I had a church they had this designated fund, and they were kind of unhappy about having so many designated funds, but they had a very legitimate reason to use the money. And I thought, well, why not use the money? So try to do that. Hopefully it's less than 50,000, but if it's more than that and you just cannot contact the donors, it's just been too long, we don't know who they are, then I would contact an attorney and get their, I've heard of getting a court order to change the designation. Yes, ma'am.
When you're setting up the designated fund,
Uh-huh.
is there any wording in there that can, in the fund, if it's finished or if it proves, if you say up front,
Mhm.
so the donors know, hey, if we decide not to do
Yeah, you can put that wording in there that the control of this fund is in the church's hands, and it is possible for us to change that, but they need to know up front. So a lot of us have funds that have been sitting there 20, 30 years, and that doesn't help for those. It's only for those in the future. Yeah. All right. Does anybody have any questions about these things in a general way? Or anything we talked about today?
Let me ask you another question about
Okay.
If you have one, and it's like, this church has a bus fund, they no longer have a bus, but they have vans and they have transportation. Can the bus fund money be used for the transportation if the church votes on it, or does that still have to go through?
Well,
Is it still being used kind of?
how was the bus fund talked about in the beginning? So, did they say, we are going to buy a brand new model, 2025 Ford bus?
Bus ministry
Yeah.
they no longer have, and the money is still sitting there.
Well, if it's really for that ministry, can we still use it? And I think so. I think it's how did we talk about it? Did we specify exactly what we were going to buy with it, and it had to be we said in our terminology, we said a new bus, meaning not a used and that sort of. Sometimes we shoot ourselves in the foot with the way that we term things, but I think if it was a bus ministry, that was the purpose, and we're using that for transportation ministry that we're doing now, I think it's very possible to use that money. But look back at how you your terminology that was used. Look at those things. If you're in doubt, then does this Alabama law involving the Alabama Attorney General, does it help you? Would it help you? All right. I'm going to dismiss this. We're a few minutes early, but I'm going to dismiss this, and I'm going to sit right here. I've been standing all day. Y'all been sitting all day, and I know you're tired of sitting, but I'm going to sit right here. And anybody who has a question, I'm not in a big hurry to get going, and be glad to sit down for a few minutes. And anybody that has a question, be glad to help before you get going. Glad you're here. This is a great group. Thank you for being here. Let's have a word of prayer as we go. Father, thank you for today. Thank you for a good day. Thank you for the blessings that you've given us. Thank you for each person here and each person online. And we just ask your blessings on each one. In Jesus' name, amen.